ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, 24 hours ago, all eyes were on whether New York State would begin seizing Donald Trump's assets as a deadline passed to post a bond of around $500 million. Now, overnight, the former U.S. president's wealth has ballooned to $6.5 billion. This, as the bond he needs to pay, was cut to $175 million. Well, let's get the details from Bloomberg's Charlie Wells. I mean, it's an incredible comeback. So what impact will yesterday's decision actually to reduce Trump's bond have on his wealth?
Yeah, I mean, it was a very Trump day, right? You got the sense that there was peril in the morning, and then he ends up on the Bloomberg Billionaires Index at the end of the day. And I mean, the issue with the bond was like very much a cash crunch. So that was more cash than Trump said that he had on hand. And the concern in Trump world was that he might actually have to start selling assets at potentially to low prices. Attorney General Letitia James had indicated that she may be willing to seize assets. This was a complete reversal of that. He said that he is going to be able to post that $175 million.
So pre-market, we've seen that the Trump social media firm actually gaining quite significantly. Is there momentum behind this trade?
It seems like there is. So, this has been a 29-month process of this merger. It almost reminds me of, SPAC mania back in the day. And this is kind of Trump Media merging with a blank check company. Mm-hmm. Shares, of that blank check company were up 35% yesterday. They're up about 20% this morning. And it's very much an attention economy play. It's very much tied to Trump's, attempt to regain the White House. But look, this is a company that has really struggled with profitability. They lost $49 million in the 9 months through September. Revenue of, about just north of $3 million. So really struggling there. It's very much about momentum.
Thank you so much for the terrific briefing. Charlie Wells there with the very latest on Trump Media and Technology Group pre-market. You can see almost up 20%. Now you're looking at live pictures of the Francis Scott Key Bridge in Baltimore, which collapsed after being hit by a container ship. Rescuers are searching the water after a number of vehicles fell in. The Maryland Transportation Authority has issued an alert on X telling drivers not to use Interstate 69. The disaster severs a key link on the major highway encircling Baltimore. We'll completely, of course, bring you all the latest on this as well.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
so functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How about the Instagram? Can you about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
To me, the strength of the economy, that's a reason to expect a ceiling on how many cuts the Fed can deliver.
I think that the Fed is going to be a bit more prudent and only start easing much later in the year.
If they're not careful, they could cut rates and we could wind up with higher yields, not lower yields.
Central banks are really coming back into focus. We're going to get those cuts.
I'm concluding that the Fed put might actually be back.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning.
Looking here, BlackRock CEO Fink warns of snowballing debt hitting the US economy.
On the S&P 500. What a snoozy start to a holiday-shortened trading week. It felt like the death of summer-style price action yesterday, Bramo. There's one word that sort of echoed around Wall Street: stretched. RBC, sentiment is stretched. BTIG, we're quite stretched. Just how stretched is this equity market?
It's a good question given the fact that Max Kettner, who's going to be on the show shortly, thinks there is no bubble. So he's stretched but not bubble. Therefore, what do? I don't know. Sit on your hands and hope for summer.
Julian Emmanuel saying this over at Evercore. He's going to join us on the program a little bit later. We're in the exuberance zone. I guess my question this morning, AMA, is just how irrational is that exuberance in this stock market?
Well, it's a good question. We're hearing a lot of people talk about this. Have we gone over in the sense that you talked to Bob Michael, talking about it be the mid-2000s? Well, what happens then? It's the start of potentially the bubble bursting. So it'll be interesting to see what the data shows today and if the Fed actually takes it on board or if they ignore it and say it doesn't matter, to Mohamed Al-Larian's point to us first on Bloomberg TV and then to the FT overnight, talking about the fact that doesn't matter for the Fed because are they now going to potentially start to move towards targeting an inflation range, not a pinpoint of 2%?
Do you think it's a contrarian indicator that Marko Klanovic is now less bearish? I mean, essentially, he's coming out and explaining how it can be justified. That basically, if you have central banks easing policy and you have earnings growth hanging in there, maybe it could be justified and sort of tiptoeing away.
Sort of basically describing where we are currently.
Correct. Did you see that?
I did see that.
I thought that was sort of interesting because he's been kind of bearish and contrarian, and I welcome the bearish contrarian feeling. But it just shows how it's difficult to be a bear right now.
AMH was talking about the Financial Times, front page of the FT this morning. See the far left side of that? Liz Truss moment in the US Treasury market. I thought of Bramo almost immediately, who coined that maybe a few months ago. Larry Fink of BlackRock just out with his letter this morning. Lisa, here's a quote from that. A high debt America would also be one where it's much harder to fight inflation since monetary policymakers could not raise rates without dramatically adding to an already unsustainable debt servicing bill. Warning of the snowballing debt hitting the US economy.
This is a no-brainer. Honestly, everyone says this is eventually going to be a problem unless rates go to zero. This is not something that people are just throwing at a dartboard. The person who was talking about the Liz Truss moment was one of the heads of the Congressional Budget Office. We're talking about people who are in the government looking at how unsustainable this is. The problem is we keep talking about that. We've been talking about that for a while. When does it come into the price action? We've got a record 5-year auction today. My guess is we won't be talking about it tomorrow.
Just going through more lines of this annual letter, Anne-Marie, raising the prospect of a bad scenario akin to Japan's economy in the late 1990s and early 2000s as well. This is the kind of stuff that keeps coming up repeatedly on this program over the last few weeks.
Yeah, and we talk about this a lot because when you look at the budget progression, what we're going to see in the next 10 years is the top line item on the U.S. budget is going to be paying off our debt before we start to pay off our actual bills or things that society needs. More leaders should pay attention to America's snowballing debt, he writes. No leaders are going to be paying attention to that. It's election season, and then we already know next year there's going to be more debt because the tax debate is going to come full throttle to Washington, D.C. And whether or not we get Trump or Biden, on some level, those tax cuts will continue for some Americans.
We'll have that debate in just a moment with Greg Valliere of AGF Investments. I want to tell you as well that we'll bring you regular updates on the bridge collapse around the U.S. port of Baltimore following a ship collision. Yahara is going to join us in about 10 minutes' time. Every 30 minutes or so, we'll bring you an update on that story. Let's start with the price action. Equity futures on the S&P 500, positive by 0.4%. That's the session high. In the bond market, yields of 423.56, down almost a basis point or so. We were up double digits, or rather down double digits last week. Then yesterday, we were up like 5 basis points and took half of that back. Lisa, I have to say, just looking at yesterday, what was that about?
I think basically from everything that I read, the trading options seem to suggest people wanted to hedge their bets about rate cuts coming through this year, about any rate cuts, let alone 3. It seems like people are worried about a Liz Truss moment. They're worried about what we heard from Larry Fink, and they just want to hedge a little bit in case this Goldilocks is getting a little bit over its skis. That's really all I can say about yesterday.
Quick note on crude. Just a little bit lower, down 1/10%. WTI 81.86, Brent crude 86.64. New 3Q price target over at Morgan Stanley, $90 on Brent by the third quarter on a tight oil market. And you saw what Mike Wilson had to say. Speaking of bullishness coming from the bears, bullishness on energy names. Bullishness on energy names.
Almost everyone's talking about bullishness, not only on energy, but also commodities more broadly, which raises this question: at what point does the robust growth and the easing policy of central banks enable inflation stemming from goods and commodities, in addition to other places?
Coming up on this program this morning, Max Kettner of HSBC on why he says the stock market rally is not a bubble. Greg Valliere of AGF on our new Bloomberg Morning Consult poll. And Pooja Sriram of Barclays as the Fed emphasizes caution. We begin with our top story, investors debating whether the stock market rally has run its course. Max Kettner of HSBC remaining constructive, writing this: risk asset valuations may be late cycle and look like a bubble, but lots of macro variables increasingly look like early cycle. Max, I'm pleased to say, joined us now for more. Max, I want to begin, not with that note, but earlier this year. You came out in 2024, looking back to a 2023 where you were very bullish and right to be so, and you made a change. You called it reverse Goldilocks. Essentially, what you were anticipating was better data, leading to a repricing of interest rates higher and ultimately causing damage in the equity market. You got the first half of the story right, struggled with the second half, Max. Why the change?
Yeah, look, I guess, what we didn't get right was that interest rate volatility didn't increase, right? You're right. When we look, for example, at shorter dated inflation expectations, they did increase, right? We've seen January and February CPI data clearly surprise to the upside, and we have seen longer dated real rates up. We have seen the long end of the yield curve up, right? We've seen all of this, but contrary to last September, October, contrary to last February, for example, we've not seen interest rate volatility go up. And that usually is the one thing that sort of is needed to weigh on equity valuations, to bring, equity multiples down, and then to sort of spread a bit across the asset classes. That really is what's been missing. And to us, look, when we look at longer dated forwards, they're already at sort of 360, 350, 360. So even if we do push perhaps towards 4%, at least half, maybe 2/3 of that story is gone. So that's why, about a month and a half ago, we said, look, even after such a short time, it doesn't pay to be bearish, right? The data is way too good. You've got to stay bullish, and you've got to stay bullish on equities and on high yield in particular.
And you are bullish stocks, bullish credit. So, Max, is this a tactical call, a short-term call, a window where you think we can do okay, or is this a longer-term call?
No, I think it's at least for the next couple of months, right? It's not something where I would expect next week to say, actually, let's reverse course again, and let's say the exact opposite again. No, I do think that can go well into the second half of this year. Perhaps then, right, towards perhaps the Q3 reporting season. So in October, November, we are seeing, obviously, the US election, perhaps a bit of election volatility, but more crucially, earnings expectations then are much higher, much more challenging to beat. We might also see, perhaps the Fed, and then perhaps the discussion that you guys were just having around the Fed, we might have this discussion come to the fore where, we might start to discuss, can the Fed really cut 4, 5, 6 times? Can they cut down to 4, or can they cut down perhaps even to 3, or are they stuck at 4, or perhaps even 4.5? Or might they even have to reverse course again in 2025? That discussion, I think, for the next 5, 6 months, we can sort of forget about that, because so far I think central bank policy, particularly with regard to the Fed, is very, very binary. They either cut or not. And to be honest, as long as they cut, I think we're still going to have a great, great relief rally in equities and high yield and risk assets more broadly, because there is still so much cash on the sidelines.
So just to sit on that for a second, you don't think it matters whether they cut 2 or 3 times or even just 1 time? As long as they cut it all this year, that's enough to keep this rally going in a significant way. Why?
Yeah, absolutely. Absolutely. I think, there's those kind of charts floating around right now where people just look at December 2024 Fed funds futures versus the S&P, and this big wedge opening up, right? This big divergence opening up. I think this chart kind of doesn't make sense, because what really matters is the starting point where then the market can really start pricing interest rate cuts. Once the Fed then has started to cut once, twice, perhaps 3 times, and then in the second stage, we start discussing about, hold on, now that we are in the cutting cycle, how far is it actually going to go, right? How far are they actually going to go? That then, the second stage, will be crucial. But the first stage is simply this binary nature. It's this, are they going to cut or are they not going to cut? And there is still an awful lot of investors that are, a bit contemplating, with this revival of growth, with very easy financial conditions, there is a risk that they won't cut at all. Let's not deploy all the cash that we have on the sidelines. So I think once the fact is happening, I think there is still a lot of cash on the sidelines that then will be deployed in markets.
You said it doesn't pay to be bearish. And that makes me very nervous. It makes a lot of people very nervous, given the fact that typically a two-sided market tends to be healthier. Ed Yardeni yesterday was talking about Alan Greenspan in 1996 when he talked about irrational exuberance, and that was sowing the seeds for the internet bubble. Are we in a similar period where it doesn't pay to be on the other side of a rip-roaring rally that potentially is headed a little bit too high?
No, absolutely not. I think that's. I'm going to throw, Lisa, I'm going to throw something at you that you cannot argue against with, because I've seen a survey, I think from Bloomberg, I think one of the Live surveys last week, where you guys were asking, is this a bubble or not? And interestingly, I thought it was around 45% saying it is a bubble, and another 45% were saying it's not a bubble. I would be really genuinely concerned if you had sort of 80, 90% of the people saying it's not a bubble. I think that would absolutely validate your thesis around irrational exuberance. But as long as it's still so sort of pretty balanced in terms of the views, that to me is not really bubble territory yet, right? And in terms of the macro data, when we look at things like CEO confidence, consumer expectations around their financial situation in the future, when we look, for example, at global manufacturing leading indicators, right? When we look at now globally, central banks moving away from hikes towards cuts, where we should be starting to talk about the lagged impact of monetary easing. All of those things look much more like early cycle, not like a late stage or close to recession thing. So that's why I don't think it's really, really bubble territory. And one last point, when we look at the S&P, it's only around 9% higher compared to the peak in early 2022. However, if you look at US nominal GDP since then, it's actually up 13.5%. So you can make the argument that particularly some of those cyclical sectors that have gone through a proper earnings recession, that they really have some catch up to play on the earnings side.
Got to be careful, Max, with any survey that Bramo has access to. Just sits there clicking it. Bubble.
Oh, you think I'm trying to skew
Just
that?
saying, you have the potential to distort surveys.
You think this is why the University of Michigan doesn't call me?
Voting loads.
Is that really it? You just
maybe. Because you'd be the kind of person
that
if they did call, you'd be like 10% over the next 1 to 5 years.
That's what you want to do.
Max Kettner of HSBC. Max, thank you, sir. We promised you some updates on the bridge collapse in Baltimore. Here's the first big one this hour. Maersk says the ship that it chartered caused the bridge collapse. That headline crossing just moments ago. Maersk coming out and saying the ship that it chartered caused the Baltimore bridge collapse. Bramo, that stock is down by 4% at the moment.
After a pretty volatile period, the company is saying we are closely following the investigations conducted by authorities in Synergy. Question here really lies with liability at this point if they did charter it, although they did say no Maersk crew or personnel were on board the vessel.
Let's get you some updates on that story and a whole lot more. Here's your Bloomberg brief. Here is Yahira Haquez. Hey, Yahira.
Hi, John. We start with a warning about graphic images. The Francis Scott Key commuter bridge in Baltimore has collapsed after being rammed by a container ship. The Associated Press reporting at least 20 people and multiple vehicles plunged into the Patapsco River. As you said, Maersk says the vessel was under its charter. The bridge is a major part of the road network around Baltimore, carrying more than 11 million vehicles a year. Motorists have been advised to avoid the I-695 interstate this morning. Florida Governor Ron DeSantis signing a bill limiting access to social media accounts for minors under the age of 14. The law would require parental permission for 14 and 15-year-olds and would force all social media users in the state to submit identification documents to verify their age. The move comes as some states clamp down on social media platforms over mental health concerns and their role in spreading sexually explicit content. And WeWork co-founder and former CEO Adam Neumann offering to buy the company for more than $500 million, according to the Wall Street Journal. It's unclear how Neumann would finance the deal, which comes 5 years after he was ousted by the board. WeWork is currently undergoing restructuring efforts to emerge from bankruptcy in the second quarter. That's your Bloomberg Brief. John?
Yahira, thank you. Was that almost a round of applause for Adam Neumann?
100%.
That was.
He won. He won the pandemic.
Without a doubt, he won the bubble era, I think. Made all that money from a company that eventually went bankrupt, and now he wants to buy it back again.
At a discount. Sell
Just
high,
absolutely
buy
amazing.
back low, cash in the meantime, and be a rock star.
Incredible. We're calling him a rock star.
Well, he kind of exudes that feeling, you know, where he gets up. You know, I'm sure if Dan Ives were here,
walking around, no shoes and socks, long flowy hair.
Exactly. Exactly. You understand.
Totally.
Yoga.
Sure. Up next, a trial date set for Donald Trump.
I don't know how you can have a trial like this in the middle of an election, a presidential election. This is election interference. They are doing things that have never been done in this country before.
That conversation up next, live from New York City this morning. Good morning.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
It's a small bounce on the S&P 500, up by 0.4%. Looking at the bond market, yields a little bit lower, down a single basis point, 422.97. Under surveillance this morning, a trial date set for Donald Trump.
We have a man who just ruled he'd like the trial to start in 21 days or something. And I don't know how you can have a trial that's going on right in the middle of an election. Not fair. Not fair. I don't know how you can have a trial like this in the middle of an election, a presidential election. This is election interference. They are doing things that have never been done in this country before.
It's the latest this morning. Former President Donald Trump's first criminal trial set to begin on April 15th. The case centering around hush money payments he made during the 2016 campaign. Separately, a New York appeals court allowing Trump 10 days to post a reduced $175 million bond in his civil fraud case. Despite the former president's legal woes, he's still holding a steady lead over President Biden in 4 key swing states, according to the latest Bloomberg Morning Consult poll. Joining us now is Greg Valliere of AGF Investments. Greg, let's talk about our new poll out this morning. Are we narrowing the gap between the two leaders?
I think so. I mean, it's a poll you have to take seriously, John, because there were 5,000 people polled. It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more. But this is significant for a couple of reasons. One is the public seems to feel the economy is getting better. That's a big shift. And more people are saying they're not voting for Biden. They're voting against Trump. That's something Trump has to worry about.
When you look at the poll, Wisconsin, Biden is now leading Trump by 1 point. He trailed him in February, and then he's tying him in Pennsylvania and Michigan. How critical is the blue wall to President Biden to getting reelected?
That's a good point. I mean, you've got to win those states. What Biden has going for him, though, is money. Believe it or not, the Democrats and Biden have far more money than the Republicans and Trump, and I think that will make a difference.
How does Trump gain more when it comes to campaign donations? Do you think potentially his social media company and this merger, and they're going to start trading officially today, we see it up in pre-market, can help him? This looks like a huge windfall for him.
Yeah, it sure could help him, although, you know, the public might say he's just spending all of his own personal funds on this, and it might create a backlash. Hard to say on that. Of course, Trump has a long history of not spending any of his money when it comes down to it on his own campaigns. He finds others to spend the money.
Well, we were talking about all of these trials we started with the former president talking about how unprecedented this is and how it's complicating his effort. Is it complicating it or actually adding fuel to his ability to raise money, since all of these trials have traditionally been fundraising opportunities?
I think it's the latter. I think he can raise money off of this, claiming that they're taking his properties away or treating him unfairly. He says we're in the middle of an election. Well, it's still March. I wouldn't say we're in the middle of the election, but he plays martyr better than any politician I have ever seen. And I think he'll do that again very effectively.
In the meantime, we're wondering what President Biden, what the ramifications will be from some of the U.S.'s policy with respect to Israel and Gaza, given the fact that the U.S. did not veto the latest resolution at the United Nations calling for a ceasefire. There's been an increasing kind of tension between the U.S. and Israel. Do you think that that will bolster President Biden when it comes to support from the more progressive wing?
It may help him with the progressive wing, but at the same time, it might hurt him in a state like Florida that has a heavy Jewish population. When you see Netanyahu and Biden not even speaking to each other, that's shocking. I mean, the Israeli-U.S. ties over the last few decades have been rock solid. Now they're not.
What do you think Biden's response to this should be, in the sense that, do you think people are going to go out and vote on foreign policy November? Or is it just something that he needs to do to make sure that he's shoring up some of these smaller bases in places like Michigan?
Yeah, I think he needs to shore up bases. I'm really intrigued by the finding in this new poll that people now see the economy getting better. They're probably looking at the stock market, which has been rocky for the last couple of days. But as you know, the stock market's been pretty good for the last couple of months. I think that's a real plus for him.
Yes, the economy, do people feel like it's getting better? But if you look into the poll, people still trust Trump more when it comes to interest rates and everyday pocketbook issues. How does Biden change that?
Well, I think he's got to stay on message and talk about tax cuts for the rich, things like that. Let me just add one other really interesting wild card, and that's Robert F. Kennedy. He's probably going to announce today his running mate. I'm shocked to see in some polls Kennedy is at or above 10%. He could have a big, big impact.
Just in the around the world kind of moment in politics that we're having with you, Craig, I do want to just finish up with something a little different, honestly, that probably markets care a little bit more about in the front and center, which is the tit for tat around tech between the U.S. and China that seems to be heating up. Overnight, we did hear about China potentially banning the use or limiting the use of U.S.-produced technology in government super infrastructure. How much is this going to really lead to some sort of response from the U.S. and highlight how much this could potentially escalate into the November election?
Well, the friction is real. I'm encouraged to see that Janet Yellen is going back to China in the next couple of months, but I think there's a need for really serious negotiations. I think U.S.-China relations are another big, big wild card and a negative one potentially for Biden.
Hey, Greg, always good to hear from you, sir. Greg Valliere there of AGF Investments. More on that morning consult Bloomberg poll in just a moment. Stunning pictures coming out of Baltimore overnight. Let's get some of those pictures up now for you. The Francis Scott Key Bridge collapsing in Baltimore following a ship collision. Two updates in the last 20 minutes or so. The first coming from Maersk, the container shipping company, saying a ship it chartered caused the Baltimore Bridge collapse. That stock is negative in today's trading. This from the White House just moments ago, Anne-Marie, saying no indication of any nefarious intent in Baltimore.
Yes, so the White House obviously will be getting briefed on everyone, including all the local personnel that's on the scene there. And we do know there has been a ton, given this attack took place early morning. And they're saying no nefarious intent right now in Baltimore. They're obviously going to be monitoring this situation. But this is a situation where, you know, we're talking about Maersk, but people are potentially going to be drowning. This is a number of cars that fell off this bridge, and there's going to be a tremendous amount of local authorities on the scene there. And I imagine the White House at this moment will be monitoring every single situation, every single moment of the situation.
Still piecing together what happened here. I promise you another update in the next 20 minutes or so. Let's turn to financial markets just briefly. Equity futures on the S&P 500 shaping up as follows. On the S&P 500 bouncing back by something like 0.4%. Yields a little bit lower by a single basis point, 4.2316. Plenty of Fed officials speaking, Bramo. I have to say, pretty consistent with what we heard from Chairman Powell last week.
Yeah, although Raphael Bostic was interesting. He used to be the dove. Now he's the hawk by saying he only thinks one cut this year. So, you know, an interesting sort of shifting of the birds.
I know you're focused on cocoa futures as well. You see that?
That's awesome.
$10,000 a ton.
Not awesome.
I'm not sure how awesome that is to some people.
Well, it's not awesome. It's terrible.
Not ahead
but
of
it's
Easter.
just amazing. It's sort of shocking.
names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I can just feel, I'm anticipating just how bearish the conversation that's about to take place in about 5 minutes is going to be. Let's start with the price action. Equity futures on the S&P 500 positive, bouncing back by 0.4%. The NASDAQ yesterday snapping a 5-day winning streak. Very muted losses, I have to say. Really marginal stuff. We're higher today by 0.5%. If you switch up the board and get to the bond market, the upgrades, the catch-up in the bond market from Goldman yesterday, raising the year-end 10-year target to 4.25 from 4%, which is basically where we are currently. The 10-year 4.2316, down a single basis point at the front end of the curve. Lisa, down 3 or 4 basis points. Let's call it 460, 458.89.
We were talking about this yesterday with Jim Bianco. At what point does the long end wake up to the idea that this Federal Reserve is allowing inflation to run hotter for longer? It's really a key question. Right now, we're not seeing it at all, even with another record auction today of 5-year notes. How much are we going to see that sort of start to the fore, especially heading into the election?
You know what the cheat code is now in consensus? What you'll hear is this. We'll get a steepener. Okay, and basically it's a cheat code because you get to say the front end's going to rally because we'll get a couple of rate cuts.
Right.
And something's going to happen at the long end, but I can't talk too much about that. But if you ask them to be specific about where they think the 10-year yield is going, that's where they start to struggle, I think. Because to your point, if you get inflation starting to inflect higher, maybe just stabilizing around higher levels, you start to factor in maybe a Fed that is looking at a neutral that's got a 4 handle, not a 3, not a 2, then you're in a very different place at the longer end of the curve.
I get the sense there is a great degree of humility right now from a lot of strategists, whether it's bonds or stocks, by the wall of money that keeps flooding in. And people who theoretically could make a case for why yields should be higher are seeing the money just keep flooding in and not seeing the case to really bet against it, which really raises the question, what makes it wash out? And really, that is one of the key questions. Or will it always be there? And if that's the case, you have to reset at a different level.
We'll dig into that theoretical case in just a moment. Let's turn to foreign exchange. The euro at the moment shaping up as follows against the US dollar. The euro stronger, positive. We're at 108.63 and positive by 0.25%. Under surveillance this morning, divisions growing between Israel and Washington. The Israeli government cancelling a trip by senior officials to D.C. The decision coming after the White House opted not to veto a UN resolution demanding an immediate ceasefire in Gaza. The office of Israeli Prime Minister Benjamin Netanyahu had demanded the US veto the resolution. The US abstained, citing a failure to explicitly condemn Hamas for its October 7th attack. Monday's resolution marking the first time the Security Council has openly endorsed a ceasefire. Anne-Marie will catch up with the Israeli government later this morning.
Yeah, we will. Ron Dermer. And this was an individual that was supposed to be heading to the United States. This trip now suspended because the U.S. decided not to go ahead with that veto. They abstained from this vote. The U.S. saying they're very disappointed, but we've been seeing it for weeks, whether it was over the weekend, Kamala Harris's interview saying she's not ruling anything out when it comes to consequences if Israel was to go into Rafah. And then, of course, that really groundbreaking speech by Senator Schumer saying Netanyahu should be stepping down. The gap keeps widening between Netanyahu's government and the Biden administration.
Let's listen to the response from the Biden administration so far. And it goes something like this. nothing's changed. Why the overreaction? What did change for Israel yesterday, which essentially is going to be my first question about an hour from now? What do you believe changed? Because the US is turning around and saying, you're making a big deal of this, nothing's changed.
Well, it's the first time the UN, even though many really question whether the UN has any authority for this, but the first time they have openly endorsed a ceasefire. But I don't know if it was just this moment. This potentially was a moment for Netanyahu to push back on all the rhetoric I just mentioned, whether or not it was Schumer, Kamala Harris. You do see they really are starting to, it's becoming more of a wider gap between these two governments.
Here's a story on Lisa's radar. I want to talk about China just briefly. A handful of US CEOs reportedly extending their stay in Beijing for a Wednesday meeting with Chinese President Xi Jinping. A list of executives invited to attend hasn't been made public, and sources telling Bloomberg there is a, quote, understanding Xi will be there. His name isn't listed on any invitation. The same tactic was used back in November when he attended a dinner with US business leaders, executives including the Pfizer and FedEx CEOs, already in Beijing for the China Development Forum, which ended on Monday. Bramo, what do you make of this?
I'm not sure. Is this going to be an outreach to try to get them to stay? Or is this going to be a really frank conversation with some of these executives about why they're unclear about how quickly and how much they can really commit to a country that doesn't seem committed to them? I mean, we look at foreign direct investment, coming down for a second straight month. This has been an issue perpetually for companies that want consistency, if nothing else. So to me, it's interesting that they're all there kissing the ring. Do they get some sort of promise in response that they can bank on?
Yeah, I think things have changed, haven't they? It used to be them rolling out the red carpet for Xi. It feels like Xi is now rolling out the red carpet for them.
Maybe. Let's see how serious he is about this. He did that in San Francisco to some degree, but I am curious to see whether it's the same kind of tone, especially given the fact that all of the public proclamations by officials are pretty sanguine on the economic picture.
Whether or not what she, well, first off, we have to make sure she actually does intend to go and actually shows up. But it's really the optics of this. I think what he's trying to show to the rest of the world is that we want foreign direct investment. We want you to come to China. The issue is it comes at a moment when also just ahead of the Treasury Secretary set to go, according to Politico. So does this pave the way for potentially that more frank conversation he's going to have with the U.S.?
That's China. Next story out of BlackRock, the CEO, Larry Fink, warning of a mountain of debt hitting the U.S. economy in his latest annual letter. Fink saying the nation can't rely on taxes and spending cuts to get the problem under control. More leaders should pay attention to America's snowballing debt. A high debt America would also be one where it's much harder to fight inflation. Fink saying a debt crisis is not inevitable, calling on capital markets to help grow the U.S. economy through infrastructure and energy investments.
I'm just looking at this. How do you pay for it? I mean, this is ultimately the question is, first of all, there's a lot of disagreement about how you grow the economy. And then the second question is, what are proper investments to pay for at a time where it's getting more costly to borrow? It's a real debate. I'm not saying this with snark. Honestly, I don't have the answer. But this is where the debate should be in Washington, not some of the things where it has been focused.
Grow your way out of it is going to be the response we hear from Washington.
Yeah, well,
let's see how that goes.
But do you grow it out of it by cutting taxes? Does that happen proven
That's
to work?
That's going to be one offer down in D.C. from one party.
Right.
Yeah.
Is it going to be removing restrictions for businesses? That's going to be one party. Do you invest in infrastructure? Okay, well, then how do you pay for it, and how do you justify
Another
something that
party
has
would
earmarks?
say we tax the 700 and something billionaires that live in America, and that will address everything.
Point being, a lot of people would agree on the premise, but not necessarily the resolution.
Let's get another view. Larry McDonald, founder of the Bear Traps Report, warning that the, quote, fantasy of a return to normal is unlikely. In his new book, How to Listen When Markets Speak, he writes this: an unprecedented era of easy money is coming to a screeching halt. We're about to witness a new era defined by sustained inflation, a series of sovereign and corporate debt crises, and a historic multi-trillion-dollar migration of wealth. I'm pleased to say that Larry joins us now for more. Larry, good morning and congratulations.
John, thank you.
Thank you very much for being here with us. Can we get into that? The word crisis seems to come up a lot. What do you anticipate is going to happen, and do the thoughts of Larry Fink this morning resonate with you?
Well, first of all, gratitude. I'm so grateful to be here with you guys. I'm coming up on 20 years on the Bloomberg terminal, and that's a long time. And, we have a great institutional business, and this book democratizes information for the viewers, right? And so we've been having these conversations for the last couple of years with the professional investors. And what we want to do is bring kind of the intelligence gathering that we've done around the world over the last couple of years and bring it out to a broader audience. And the bottom line is, everybody in America, everybody's 401k is set up in a 2010 to 2020 portfolio. And that was really a disinflation decade for a whole bunch of reasons. Post-Lehman, I was fortunate enough to write the Lehman book. And now this is about the 2020 to 2040 portfolio, which is, right now there's about 21 trillion, 22 trillion in the NASDAQ 100, $22 trillion in financial assets. And then when you look at hard assets like copper, aluminum, oil and gas, things that are going to really bring forth our economy to the next generation, you're only talking about $3 trillion in those entire asset classes. And that's what this is all about.
So this raises this question of how do you get the ball of money or this wall of money or whatever you want to call it to shift in those directions, and is there enough to go around? Is there basically not the fear of massively rising yields because there just is so much cash that's been created by the 2010 to 2020 decade?
Well, you know, this year is very political because of obviously an election year, and we've had a disinflation cycle. I guess a disinflationary moment here in the last like 3 or 4 months where inflation came down, and a lot of people are encouraged by that, and so that's brought on a lot of cheerleaders. You know, we're going back to the previous, world. And when you look underneath the surface, it's a multipolar world. We've got sea lanes that aren't working properly. We've got drone attacks on refineries. You know what I mean? This is a different world. And so the probability that inflation normalizes 3 to 4 instead of 1 to 2 is extremely high. And if that's the case, there's trillions and trillions of dollars that are basically in the wrong place.
What's going to be the wake-up call? Because we've been talking about a Fed that basically just said we're going to allow inflation to run hotter for longer. Markets don't seem to be particularly alarmed by that. When does that change?
Well, they have to think about when you have a $35 trillion debt hole, there's 2 ways out. Debt jubilee, and we've seen that going back the last couple thousands of years. Civilizations have gone toward a jubilee. We won't get into that kind of bearishness. But the other way
Just noting here that the Bank of England allots £40 million in a 6-month ILTR operation, matching banks' bids.
When you look at, say, the Fed meeting and the post and all the questions that come out of it, nobody's asking the Fed, when he says higher for longer, right? When he says that, somebody has to ask, well, if it's $80 billion a month of interest, how can you stay higher for longer? Like, at some point, they're going to have to really hold down that front end. And right now, 80% of all debt issuance is in T-bills with that kind of massive amount of debt issuance. And so you can just tell they're trying to play the waiting game. Eventually, they're going to have to suppress the front end to get us out.
That's the sovereign story. Just how well understood is the corporate story? And we have a decent understanding. There is some transparency there around the maturity wall and how much of that has already been basically taken down in the supply of the first quarter of this year. How well understood is the corporate side of the story?
Well, I just look at the super regional banks like Zions and Comerica and U.S. Bancorp. They're underperforming the S&P 500 by over the last 2 years by close to 40–50%. That's very unusual. So that tells you that there's a debt problem either in commercial real estate or on the corporate side that's out there. But the corporations did a really great job of, as you guys have shown, pushing out the maturities to 24, 25. But the problem is we have in 24 and 25, let's say the next, 24 months, if you add up all the commercial real estate loans, plus the leverage loans, plus high yield and investment grade, it's like $2.5 trillion. So that's going to be an issue probably for later on in the year.
So you clearly think there's something highly incompatible about where the market is versus where you think the regime is going to relative to where we were, say, 10 years ago. And I'm trying to work out, how do we get 10, 20 years down the road in this cycle, this new regime that you think we're in at the moment, if we've got to work through all those debt issues? I'm not sure how the two things are compatible, that ultimately if the Fed has to stay high for longer because you believe inflation is going to be a problem for a lot longer, doesn't that just address itself?
Well, typically, this kind of debt load would cause a financial crisis event. We saw that last year, right? But look what happened. The moment they smelled the Lehman moment, the Fed, they juiced the balance sheet, and they're going to basically attack any financial problem with rate cuts and balance sheet. So then at the end of the day, that gets you into a weaker dollar regime, because that's one way out of a financial crisis, right? Is now they've got all this firepower. They got 5.25% of rate cuts, So they can really attack a financial crisis aggressively with rate cuts. If they do that, that gets you a much weaker dollar on the heels of what's happening in commodities. Then you're going to have the real big commodity boom.
which is the Liz Truss moment when all of a sudden the U.S. loses its reserve currency. This to me is really the key question, though. Ultimately, is this a matter of the leverage shifting away from the private sector to the government sector, and for the Fed to have to rescue the government by keeping rates lower and allowing inflation to running hotter? How hot are you seeing inflation potentially running? Are we just talking 3%, 3.5%? Are we talking about something more in the fours that really does kind of weigh on people who do go to stores and see their grocery bills picking up quite materially?
And that's the thing, is that right now the boomers control about 76 trillion of wealth. 76 trillion of wealth, whereas the millennials control about 8 to 9 trillion. So the boomers are sitting on a lot of capital. They're getting a tremendous amount of money in the banks, in the money market funds. But the bottom 30%, the bottom, say, 60%, are just being suppressed with higher inflation, and they have about $400 in their checking accounts. That's according to the New York Fed told us that, remember? So they had $400 in their checking. So it's really two economies. One economy is booming because Powell gave the wealthy boomers a 300% pay raise. The bottom 60% under this inflation stress. And then you could see this in some corporate earnings, right? You can see it in McDonald's, you can see it in pet care. And so it's two economies that are kind of fighting it out right now.
I have a feeling we'll be talking about this for a long time. Larry, it's good to see you. Congratulations on the book. It's fantastic to catch up. We're going to do this again soon. Larry McDonald there on his new book. Let's get you an update on stories elsewhere this morning, an update on the bridge collapse in Baltimore. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. We start by warning you, these are graphic images. Baltimore's Francis Scott Key commuter bridge has collapsed after being struck by a container ship in the early hours of this morning. Emergency responders have described it as a, quote, mass casualty incident, with as many as 20 people and multiple vehicles plunging into the water. Baltimore's fire chief says 2 people have been recovered from the water so far. In an emailed statement, Maersk saying the container ship Dolly was operating under its charter. The White House says there is no indication of any nefarious intent. Troubled electric car maker Lucid is getting a $1 billion cash injection from its biggest investor, which is an affiliate of Saudi Arabia's public investment fund. The U.S. company saying the new financing will be partly used for capital expenditure and as working capital. Lucid shares gained nearly 6% yesterday, though they are still down by roughly a third so far this year. Former President Donald Trump's social media company is rising ahead of its first session as a publicly listed company. Trump Media and Technology Group will begin trading today on the NASDAQ under the ticker DJT following its merger with a so-called blank check company, or SPAC. The deal gives the parent company of Trump's social media platform, Truth Social, more than $275 million of much-needed capital, plus providing a windfall for Trump as he faces a mounting series of legal and financial issues. That's your Bloomberg Brief. John?
Hey, Hara, thank you. Up next on this program, the Fed proceeding with caution.
The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
And that conversation up next. You're watching Bloomberg TV.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, well, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
And was going to keep Rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Fascinating conversation with Larry. So essentially, just to conclude, I spent the commercial break thinking about it. We're going to have to pay for financial stability with higher inflation, right? Is that basically the trade?
And pay for a deficit that otherwise would be completely unsustainable with inflation, to inflate our way out of it at the expense of the dollar. Because essentially the Fed is going to have pressure, even though it's not political, to cut rates to bail out the government rather than the private sector, because the government is where the debt is actually.
Got it. Got it. This is pretty bearish stuff, isn't it?
It's bearish stuff, but he's not alone. And it sounds gloom and doom and kind of, end of times, but Larry Fink was kind of nodding to this.
Yeah, he was. In the annual letter to shareholders a little bit early this morning. More on that later. Equity futures right now on the S&P positive by 0.4%. In the bond market, yields lower by a basis point or two, 422.77. Other surveillance this morning, the Fed proceeding with caution.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
It's the latest this morning. Fed officials emphasizing caution with more economic data on deck. Durable goods due today at 8:30 Eastern Time. PCE on Friday. Pooja Sriram of Barclays expecting, quote, 3 incremental cuts in 24, 4 more in 25, lowering the target range for the federal funds rate to 350 to 375 at the end of next year. Pooja joins us now for more. So, Pooja, that sounds like a little bit of a rate-cutting cycle. When I have to say, some people on the street are starting to look towards maybe just a mid-cycle adjustment of a couple of rate cuts and then wait, see, and look around. Why are you in the former camp and not the latter?
Hey, thanks for having me on the show this morning. I think 2 reasons. One is, of course, our own baseline outlook of how we think the data are likely to evolve, which was, where we were before the March FOMC meeting. We had the same expectation. We think there is a plausible path where we see inflation continuing to gradually decelerate, through the end of this year, which gives the FOMC, the right chance to, initiate a rate cutting cycle. And at the same time, we do think that there is a gradual slowdown in the macroeconomic backdrop that is quite likely. So a slowing, but, nothing more than that. And then we've always been saying that risks to this baseline outlook, looked skewed in a sense that, we could have fewer rate cuts or, more delayed rate cuts. And that was really what we were starting to see after the Jan and the Feb inflation data. What really took us by surprise is the March FOMC meeting, the press conference, the SEPs, which gave us, a little more understanding of how the Fed is thinking about this, what their reaction function might be. And, the read from all of that was that it seemed quite dovish, and it seems like they're also looking for a window to go in there and start cutting rates, and that really aligns with what we had expected earlier as well.
Pooja, a lot of people have come on this program and said that essentially the March pivot or the continuation of the December pivot highlights that this Federal Reserve is going to be tolerant of inflation at a higher level for a longer period of time. Why aren't you seeing that really reflected either in economist projections or in market expectations?
So I think we wouldn't read it as them being tolerant of higher inflation expectations or inflation outcomes. I think what we learned from the March FOMC meeting is they are, they didn't infer much from the Jan and February inflation prints. I think their baseline outlook remains one where they expect the future inflation prints to evolve lower. So nothing, for them has materially changed in terms of their baseline forecast from December to March. Of course, it's, a lot of participants did note that risks to inflation are skewed to the upside. So they're definitely cognizant of that. And I think Chair Powell was also clear that every meeting is live, it's going to be data dependent. So nothing in that seems to suggest that they're going to be tolerant of higher inflation. It's just that at this point in time, they still very much believe that they have a path to lower inflation, even with the strong macroeconomic backdrop, and they really believe that they will find a window to cut.
Why don't you think that a higher tolerance of inflation is implicit in the forecasts? Isn't that in the SEP?
So the SEP actually has inflation coming all the way down to 2.2% by 2025. And this is despite them marking their growth forecasts higher with a very benign unemployment rate. So, that if you were to look at the projections, I think they believe that they will have core PCE inflation close to 2% by the end of next year. And that allows them, to have a slightly shallower rate path and to proceed with the rate cuts that they have projected.
So your projection is 350 to 375 at the end of next year. Pooja, could you share with us where you think neutral is?
Oh, well, so here's what we think. I think rather than looking at the long run projection for the FOMC, I think tend to think that where the 2026 median rate projection is about 2.9 is perhaps where the policy setting should be. That's so a slightly higher neutral rate than we had in the past. But I think the 2026 median projection is perhaps where we think the neutral rate currently stands at.
So low threes, Pooja, is basically the guess from you. So you'd still suggest that even if we come down to 3.5, that's somewhat restrictive for the US economy, is that right?
That's correct.
Is that because you believe maybe this inflation story is going to hang about longer than expected?
It could be. I think one thing that we need to understand is, they don't need to wait for inflation to come all the way back down to 2% to actually start cutting rates. We just need to be confident that things are evolving in the right direction. And I think we'll find a window for that to happen. And a slightly higher neutral rate, I think, is a consequence of more macro fundamentals. Slightly higher productivity. We've got demographics. There's also the immigration story that the FOMC has alluded to earlier, right? Where we think that there is a very positive aggregate supply shock, something that I think they continue to expect in their baseline, which perhaps also explains why we could see a slightly higher neutral interest rate.
Thoughtful stuff. Appreciate your time, Pooja, as always. Let's catch up soon. Pooja Sriram there of Barclays on the Federal Reserve. Coming up in the next hour, Julian Emmanuel of Evercore, Bloomberg's Mario Parker, Israel Strategic Affairs Minister Ron Dermer, and Megan Robson of BNP Paribas. From New York City, the second hour of Bloomberg Surveillance. Up next.
Capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
To me, the strength of the economy, that's a reason to expect a ceiling on how many cuts the Fed can deliver.
I think that the Fed is going to be a bit more prudent and only start easing much later in the year.
If they're not careful, they could cut rates and we could wind up with higher yields, not lower yields.
Central banks are really coming back into focus. We're going to get those cuts.
I'm concluding that the Fed put might actually be back.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance begins right now with your equity market pushing higher, bouncing back by something like 0.4% on the S&P. There's the S&P 500 yesterday briefly, just snapping some of the momentum we've got on the NASDAQ, a 5-day winning streak on the NASDAQ 100, but really muted, mild stuff coming into the big print on Friday. The print we've been waiting for, and Chairman Powell basically told us what the number is.
0.3%. So this is basically where we are, which is the reason why we can take the day off. So thank you. We really appreciate it.
So we get back to the equity market going into Friday, trying to figure out just how stretched we truly are. Julian Emmanuel of Evercore on the show in about 2 minutes' time. Stay tuned. We're in the exuberance zone. First question, irrational or not?
And how long can exuberance last? Longer than many people can remain solvent. This is the issue, is that a lot of people could identify something that feels like it's getting frothy, and yet it can continue for a very long time. To me, the one key question really does remain with the bond market. How long will the bond market go along with the message that the Fed intends, which is everything is under control, we're doing just fine, we're going to cut rates, inflation's going to come down? When do people start to challenge that, and does that shake some of the exuberance?
I love what you just said. We can all identify a story that sounds bad, but it can remain bad for a long, long time. And I'm thinking of the fiscal trajectory of the United States of America. Earlier on this morning, Larry Fink, the CEO of BlackRock, coming out with his annual letter to shareholders and saying this: a high debt America would be one where it's much harder to fight inflation since monetary policymakers could not raise rates without dramatically adding to an already unsustainable debt servicing bill. Complaints this morning, AMH, a warning of the snowballing debt. in the U.S.
Yep, and he says leaders should be paying attention to it. He also talks about the cost of servicing the debt, how much that's ballooned, and 3 percentage points in extra interest rate payments the U.S. government must pay. He calls that, quote, very dangerous, although he does say as well about a looming retirement crisis. He says he understands why millennials, Gen Z, are annoyed with the boomer generation like him, because they're going to be the ones that have to pay for all of this.
I will say there will be a lot of people who dismiss this. He's trying to act a politician and say, I understand, I feel your pain. We're worried about the debt crisis. It's going to be a crisis. He said this for a long time. However, PIMCO's Andrew Balls, did you see this story? It was really interesting.
Yeah, not long duration in the U.S., but elsewhere.
Exactly, because of this concern about the deficit becoming an issue. So, key question again, when does it matter? Because right now, it seems like it's under control and people talk about the wall of money that just keeps going into bonds.
That's the market story. We promised you updates throughout this morning on the latest in Baltimore as well. So here is the latest, just absolutely stunning pictures to wake up to as the Francis Scott Key Bridge collapses following a ship collision. In the last hour or so, just piecing together what happened here, from Maersk, the shipping company out of Europe, big global container shipping company, saying the ship it had chartered caused the Baltimore Bridge collapse. So that's the latest from Maersk, saying the ship they chartered caused the Baltimore Bridge collapse. That stock has been trading lower ever since we got that headline about an hour ago. And in the last 30 minutes or so, Lisa, we had a news conference with the Baltimore Fire Chief, James Wallace. A couple of headlines coming from that are worth sharing. Still an active search and rescue underway. Could go on for a long time. A large water area, subsurface and deck of ships still to be searched. They've been able to remove 2 people from the water. The latest information is they're looking for upwards of 7 individuals.
There are a number of things. The first thing is a total tragedy for anyone who is involved in this. Just on a larger scale, it raises questions about the infrastructure of the nation, especially if we're talking about air control safety and we're talking about bridges collapsing. I understand they're all one-offs, they're all anecdotes, but at a certain point you have to wonder when this raises questions about updating certain types of security infrastructure that would make the country more secure.
Also, the Baltimore Fire Chief is talking about they're not able to determine if there's an active fuel spill because of the darkness. So as we get into the later hours of the morning, they're going to be assessing this. And if there's a fuel spill, that's going to add to a lot more issues as well in what's going on in this crisis.
The message coming from Mayor Scott this morning, thoughts with families, and the focus will be on the search and rescue, and I think that all resonates with all of us. Promising you regular updates on this story. We'll get another one in about 10 minutes' time with Yahira. Look out for that. Let's start with the price action just briefly on the S&P 500. Equity futures on the S&P bouncing back by something like 0.4%. Yields a little bit lower by a basis point or two on a 10-year, 422.77. Coming up this hour, Julian Emmanuel of Evercore on whether the rally in stocks is different this time. Israel's Strategic Affairs Minister Ron Dermer on growing tensions with the United States. And Megan Robson of BNP Paribas expecting a, quote, credit soft landing. We begin with the top story. Fed officials maintaining a cautious view on rate cuts ahead of a fresh dose of inflation data on Friday. Julian Emmanuel of Evercore ISI writing this. The phrase, it is different this time, is being heard everywhere, especially since the Fed has promised to cut rates from a position where the economy is not slowing. We do think that Friday's core PCE number could surprise to the upside and a cut would get quickly priced out and the market would respond with stock weakness. Julian, I'm pleased to say, is with us for more. Julian, good morning.
Good morning.
Good to see you, sir. In the exuberance zone, can you describe what that zone is and whether it's irrational or not?
It is not irrational, okay, because I think when we as investors think about history, we have to go back to the time where, frankly, having run money during that time, you knew there was irrationality in year 2000. That was 28 times earnings. We are at 23 times earnings now. The S&P, in our view, would have to get a lot closer to 6,000 to get to irrational. However, we are seeing signs of, the wall of worry having been completely dissolved, very aberrant behavior in the options markets, betting on stocks doubling in the course of 3 or 4 days, incredible. Betting on the NASDAQ rallying a further 33% out to June after already rallying 30% since the October low. All of these signs, you see short interest being at decade lows. All of these things say that there is a feeling that the market isn't invincible. And when you think about the narrative of the last several months, where we walked back from 6 rate cuts to 3 rate cuts without the market, pausing for even a moment, you can understand why we're there. We think that the reaction to hotter inflation may be different.
You know what the comeback might be? Just because you found someone playing blackjack doesn't mean we're in Las Vegas, right? You know, you can always find something like that.
You could redefine it.
You can find the gambling going on somewhere. That stuff always exists. What's new about this?
So what's new about this is that this phenomenon known as 0 days to expiration options really, in a lot of ways, is the equivalent of what we saw back in the late 1990s. It was called day trading then. Obviously, it's called high-frequency quantitative trading now. But the speculation that you can really cause to happen every single day, and we saw it in this earnings season, this last earnings season, and we're likely to see it again this earnings season, where you have these stocks that have enormous gaps to the upside and the downside because of the exuberance that really has no precedent in the options market.
Which raises the question, where is the reality check? Where is the gut check? You say it comes from, in some ways, the inflation data. It comes from Fed expectations. It comes from the bond market. What's the trigger, though, at a time where the market is hearing what the Fed is saying? And then some. They're hearing the rosiest picture that the Fed's going to let inflation come down very slowly, but that they will get it under control.
So when you have momentum of this kind of strength, and we have to acknowledge that this is among the most record-setting periods of momentum that we've seen, there tends not to be a discrete trigger. The one thing we would point to is when you think about it, actually the month of April is sort of an outlier in that what you tend to see is sort of momentum reversals. And what we've looked at over the month of March is some of these momentum names have stalled. They haven't reversed, they've stalled. But when you're trying to feed that sort of exuberance, stalling is something that we take note of. And again, with this tendency turning the page to the second quarter, there is a potential, in our view, of momentum really taking a back seat.
How do some of the retail investors, the traders that use these options contracts that you were talking about, fit into the picture of how this will develop? Do you think that they increase the fragility of markets, or do you think that essentially they're just a feature of the moment that we're in?
Well, no, actually, and we said this when 0 days to expiration options first became, quote, unquote, a thing, that we felt very highly convicted that it would suppress volatility. Because if you think about it, the casino is open from 9:30 to 4, and then you cash your chips in, and there's no overnight risk. Okay, and actually, as a professional investor, that gives you opportunities that you might not normally have. Because when you're pushing the action on a day-to-day basis in this way, and you get these gap moves, if you're a disciplined buyer and seller of stocks, you get these opportunities to add to positions, to trim positions that actually increase the alpha and make this the environment that we're in of stock selection is also unlike anything we've seen. But a lot of this is driven by this constant exuberance that we see on the part of the public.
Can you talk to us about opportunities right now then? What are they?
So we continue to think that there's a likelihood of the economy slowing in the second half and into 2025. And when you think about it, some of these more defensive sectors that actually tend to do well in the period from the last hike to the first cut have lagged. They've had idiosyncratic issues, healthcare, consumer staples, really sort of working off the GLP-1 phenomenon. We think there's a lot of value there. And there's also this entire subset of names whose valuations haven't moved out in the way the index has, that still have strong earnings. It's across sectors.
Can we get to healthcare? I'm pleased you brought it up. What am I buying when I buy healthcare? Is it just the GLP-1 thematic story? And some people might point to that as exuberant. What am I buying?
Well, so that's what held the rest of the sector back for the majority of last year. But when you look at it, right, there's this whole notion that we've started to see M&A activity come back because financing conditions have remained as favorable as they have, and that really points to, the future in terms of biotech. Small cap biotech has done pretty well this year. We think there's a broadening, and of course, in this environment where the likelihood is that, with a yield on some of these names, 4, 5, 6%, barbelling into some of the safer names, cash flow generators, makes sense to us as well.
Interesting. Julian, thank you. It's good to see you, as always. Thank you, sir.
Thank you.
Julian Emanuel there of Evercore in the exuberance zone. Promised you a few times this morning, regular updates on the latest out of Baltimore every 30 minutes or so right here on Bloomberg Television. Here's your latest with your Bloomberg Brief. Here's Yahira Hackers. Hey, Yahira.
Hi, John. We begin with a warning. Some viewers may find these images disturbing. A search and rescue operation is underway in Baltimore after a container ship struck the Francis Scott Key commuter bridge, sending vehicles into the river. Emergency services say 2 people have been removed from the water.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that, as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we have.
In an emailed statement, Maersk saying the container ship Dolly was operating under its charter. The White House says there is no indication of any nefarious intent. A Bloomberg News investigation has found examples of a growing black market for SpaceX's Starlink internet terminals. The access points have been popping up in territories ruled by repressive regimes, including Iran, Sudan, and Yemen, while Ukraine has accused Russian forces of also using the services. Elon Musk says the company isn't knowingly providing the terminals to any of these countries. And LA Dodger star Shohei Ohtani says he's never bet on sports or used a bookmaker. The Japanese baseball player addressing media for the first time since allegations relating to his friend and interpreter surfaced. Ohtani says he only found out last week his interpreter had a gambling problem and was in debt, and that he never, quote, willfully sent money to a bookmaker. ESPN reported the interpreter racked up $4.5 million in gambling debts with wire transfers sent from Ohtani's bank account to the alleged bookmaker. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, President Biden closing the gap.
It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more.
That conversation up next. The latest poll out of Bloomberg Morning Consult up next.
On the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep winning World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Equities on the S&P 500 positive here by 0.4%. It yields a little bit lower by a single basis point. The 10-year 423.16. Under surveillance this morning, President Biden closing the gap.
It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more. What Biden has going for him, though, is money. Believe it or not, the Democrats and Biden have far more money than the Republicans and Trump, and I think that will make a difference.
It's the latest this morning. President Biden gaining ground in 6 of 7 key swing states this month, according to the latest Bloomberg Morning Consult poll. Biden seeing his biggest gains in Pennsylvania and Wisconsin. The move following the president's State of the Union, which rallied Democrats. Joining us now is Bloomberg's Mario Parker in Washington. Mario, let's start with this story, then we'll move across to the latest out of Baltimore. Can you go through this poll and how it stacks up versus what we've heard in the last few months?
This is, while this poll shows that President Biden continues to trail former President Donald Trump, this is the brightest poll for President Biden so far to date. He's essentially gained ground in some of the crucial blue wall states that will be that he'll need for November. One of which is Wisconsin, where he's made up ground, covered about 4 percentage points to take a slight lead on former President Trump. Pennsylvania, he's competing there, essentially deadlocked, as well as Michigan. These 3 states are crucial. These are the bedrocks to President Biden's pathway toward the 270 electoral votes that he needs in November.
Mario, the president ended February with $71 million of cash on hand. The former president ended with $33.5 million of cash on hand. Biden has a huge advantage when it comes to money. Where's he putting that money?
That money, Emery, is going to those battleground states, and you're seeing the significance of that type of cash advantage right now. President Biden is essentially blitzing the airwaves in those key swing states. About 61% of the money that he has is going on the airwaves there. That's important for, at this point in the campaign cycle, at least the running television ads, right? Sometime deeper into the election cycle, it'll be important for putting people on the ground, knocking on doors, etc. This is a good position to be in for President Biden. Again, you're seeing just how he's able to kind of deploy those resources relative to former President Trump.
The other interesting point our poll finds is that actually taxing the rich is resonating among swing state voters. Is this something Biden's going to be leaning into?
Absolutely. You've heard President Biden say time and time again that he won't raise taxes on anyone making over below $400,000 per year. Now, one thing as divergent as President Biden and former President Trump's policies are, there is this populist tint, right, that's gone through the political discourse. One of those things is essentially just having the rich pay their fair share, right? So that's one thing that you do see with bipartisan support.
Mario, I'd like to turn to the shocking pictures we all woke up to earlier on this morning, which appeared to show a ship colliding with a bridge in Baltimore. That bridge was the Francis Scott Key Bridge, collapsing in Baltimore following that collision. We've learned a few details in the last hour or so. One detail speaking to where that ship was coming from, chartered by Maersk, Mario. What else have we heard?
Yeah, well, right now, the great news so far is that 2 people have been recovered. One of those folks are in serious condition, but that is at least a bright spot so far in this sad situation has developed overnight. That bridge, I've traveled across it time and time again, living out here in Washington, D.C. Just remarkable images to see it collapse in the way that it did. We're heading into, there's a couple of implications there. We're heading into Easter weekend, a busy thoroughfare up and down I-95, the East Coast. That'll create some jams there. It's one of the biggest U.S. East Coast ports for light trucks and cars as well. So you'll see some type of economic impact there as well. The White House so far is engaged. They say that there's nothing nefarious at this point.
What can the White House, or what should they be doing, Mario? Is this something you think the president has to give an address about?
Yes, absolutely. I mean, this appears, again, at this point to have been an accident, right, with the ship colliding with a bridge. But we know that infrastructure is one of the key components of President Biden's platform. It's something that he speaks about all the time. He continually boasts about the ability of the U.S. manufacturing to rebuild infrastructure in a quick ways as well. And so, yes, we'll expect to see him there. He's close with Governor Wes Moore. He's one of Biden's top surrogates on the campaign trail. Of course, Baltimore is right here near D.C. also. So you'll see the president likely say something about this.
Mario, as we do try to recover everybody right now, that is where the focus is in the human story behind this. Going forward, there are going to be a lot of questions about what went wrong, whether this was traffic controllers in the channel that were not up to par, whether it was a miscued kind of communication. Do we have any knowledge at this point what went wrong here and whether it was a vulnerability in the bridge? I mean, how much of an issue is this?
We don't know just yet, so it's tough to speculate at this point as to what happened there, whether it was traffic control, whether it was just some type of mistake on the part of the ship captain and the crew there as well. The mass of that ship hitting, again, that bridge is something that was remarkable, and I think that's kind of what we've seen there.
The immediate focus, as you know, Mario, is going to be on search and rescue. Do we have any idea of the number of people involved, the number of organizations? Can you walk us through the current effort?
Yes, right now, at least so far, the Coast Guard is engaged again, and the great news is essentially that 2 people have been recovered. So you've got Pete Buttigieg, the Department of Transportation Secretary, has said that they'll have the full resources of the federal government. Governor Wes Moore of Maryland has declared a state of emergency to essentially marshal all the resources that state has as well for search and recovery.
Mario, appreciate the update, sir. Thank you very much. Mario Parker there on the latest on that bridge collapse in Baltimore. Lisa, of course, the focus of officials on the ground is going to be on search and rescue. Need to get a better understanding of the disruption caused, the number of ships that need to reroute, the kind of traffic that's going to be caused. Now, you can't use this key location point, this key travel point. And then beyond that, then you start to get into the what went wrong. What happened on this ship? What led to this collision?
And as we get into some of those questions, it really does become reminiscent of some of the other air traffic control issues and this whole focus on an aging infrastructure that a lot of people say hasn't been invested in. It reminds me of the ships and the shipbuilding that we've been hearing about, and the fact that the cranes that we have are imported from China because we don't build them.
Well, remember the supply bottleneck crisis. I was at this port with President Biden when he was talking about this. This is a massive port, incredibly important to the United States, especially the East Coast. And you're just going to see a huge, to Mario's point, Governor Wes Moore talking about a state of emergency. It's going to be a massive interagency response on the state and the federal level.
Another update coming to you in the next 20 minutes or so look out for that. Coming up on this program, the Israeli Prime Minister Benjamin Netanyahu cancelling a trip to the United States for senior officials. We'll be catching up with one of those officials. Ron Dermer is going to be joining us next. Lisa, plenty of questions on this one because as far as the US is concerned, nothing's changed. Why did you cancel this trip?
They might say that nothing has changed. The tone has shifted, though. And I think that anybody who doesn't see that would be a little bit disingenuous because there has been a clear pushback to Israel's approach and sort of a question of the incursion in Rafah. To me, the question that I have is, at this point, how much are you depending on the U.S. for weapons, and how much do you really feel emboldened to pull away from the U.S. at a time that you rely on them?
It also could be international embarrassment, right? Netanyahu's office came out and said, we need you to veto this Security Council resolution when it comes up. And the United States said no. They didn't vote for it, they abstained. But this is something that Netanyahu says, well, then you know what? My officials are not going to be going to Washington. We should note, though, it was a suspended trip. So potentially maybe next week or the following weeks, they'll be coming to Washington.
That conversation up next. Sneak peek at a price action. Equity futures on the S&P 500 positive here by 0.4%. The S&P bouncing back from some very mild losses yesterday. Yields are lower this morning by a single basis point. The 10-year 4.2356. New price target over at Morgan Stanley in the last few weeks. Looking for $90 on Brent crude. WTI this morning, $82.11. We're positive there by 0.2%. From New York City, this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Stocks bouncing back on the S&P 500, up 1/3%, up 0.4% on the NASDAQ. The Russell outperforming once again. We saw that on Fed Day, didn't we? Up 0.75% on the Russell 2000. In the bond market, 2-year, 10-year, 30-year, and a warning from Larry Fink of BlackRock. Yields 423.56, down a basis point this morning, down 3 on a 2-year to 459.51. The warning, Lisa, the warning is a snowballing debt pile in the United States of America that needs to be addressed by the boomers, apparently.
I'm wondering if you're trolling Larry Fink a little bit. You're saying there was a warning from him. Look at those yields; they're lower by 3 basis points. But basically, you know, we've been talking about this warning about the debt overhang and the deficit in the United States, and yet continually yields go lower despite some of these concerns being out there. So again, when does that come to the fore, given the fact that, yes, this has been something we've been talking about, people talking about a Liz Truss moment, but, you know. Well, the Financial
Lisa
Times.
on the front page of the FT.
Exactly. But to me, I mean, it's just going forward, when does it actually get reflected in yields?
It's an odd situation. There's a team over at JP Morgan. I remember the line. It was something like the boiling of the frog, right? The boiling of the frog. Except the frog knows it's being boiled. That's kind of what's bizarre about this situation, right? Because we all know that exists. We all know the trajectory is unsustainable, and here we are talking about the same thing still. What we don't know is where the line in the sand actually is. It's kind of like the frog is aware that the water's getting hotter, but ultimately he's not going to get out.
The frog being boiled, in my opinion, and based on what Larry McDonald just said, is the dollar. And ultimately, as long as the dollar is the reserve currency, the U.S. will have, in your words, the privilege to act recklessly. If you do start to get a weaker dollar, and you do start to say, just slowly, people pulling away from it, then maybe things could change.
Do you remember when we caught up with President Kashkari and asked him about this topic, and he said, want to kind of push back to it. Yes, yields have risen, and there might be concerns about supply, but it's hard to reconcile that with the dollar strength that we saw in the same period.
Which is the reason why people say game on, and yields continue to drop.
That's the story there. Under surveillance this morning, a top story for you. Boeing shares rising in the pre-market, adding to yesterday's gains. The plane maker plotting a path forward without CEO Dave Calhoun. Dave Calhoun announcing he will step down at the end of the year after 3 of Boeing's largest U.S. customers reportedly asked the company's directors for a meeting to air concerns without the CEO present. AMH, you picked up on this story almost immediately yesterday. This is where things changed and changed quickly.
Yeah, because why would you go on a listening tour without the head of the company? It's because you want to complain about that individual. What I find interesting, though, is that they're giving him a long runway to the end of the year, which says to me they're trying to sort out a serious succession plan. We heard from Bloomberg Intelligence yesterday, which said this is someone that just doesn't need to know the financials. This needs to have an engineering mind, and it's a chance then, I think, for Boeing to reset.
That's the latest on Boeing. Here's the latest on China. US CEOs on a visit to China, extending their stay after receiving a last-minute invitation to a meeting with one of the country's top leaders. The CEOs of Pfizer, FedEx, and Amway are among those visiting for the China Development Forum, which ended yesterday. Bloomberg reporting the meeting is expected to be with President Xi, even though his name doesn't appear on any invitations. I guess it's just one of those things, Brammer, where you sort of know.
If you know, you know. They're just sort of smoke signals coming out that have a Xi kind of feeling. At this point, I'm curious to see what they actually hear. Is it really the welcome carpet? Is it a more nuanced message? This just highlights how intertwined the two economies are, the U.S. and China, regardless of all of the noise. And U.S. corporate executives are pretty much on the forefront of that. Do they walk away? Do they pull back? Or do they double down, as we've heard a number of them, Qualcomm including, do, because this is the world's second biggest economy?
That's going to be one to watch in the next 24 hours or so. One to watch right now. Israel Prime Minister Benjamin Netanyahu's office cancelling a planned visit by senior aides to Washington. The decision coming after the U.S. abstained from voting a UN resolution demanding an immediate ceasefire in Gaza. One of the aides scheduled to visit the U.S. was Ron Dermer, the Israel Strategic Affairs Minister. He joins us now from Jerusalem. Minister, wonderful to catch up with you once again, sir. I want to begin our conversation, if we can, with a quote from John Kirby, the spokesperson for the U.S. National Security Council. And, Minister, this is what he had to say. There's no reason for this to be seen as some sort of escalation. Nothing has changed about our policy, nothing. We still want to see a ceasefire. We still want to get hostages out. Minister, can we just begin with that line coming from the administration? What exactly do you believe has changed as they turn around and say nothing has?
Well, I believe their policy that has been pretty consistent, John, since the beginning of the war about 6 months ago, was to not accept a ceasefire that would be unconditional, and it would have to be connected to an agreement to release hostages. Unfortunately, in this text that was passed, those two issues were separated for the first time. In fact, 5 days before, there was a resolution that the United States put forward that was vetoed by China and Russia. And one of the reasons why they vetoed it is because it connected those two issues. And if you look at the text, and everyone can go see it on the UN website, and you look at the resolution 5 days ago, and you look at the resolution that passed yesterday, you'll see a huge difference. And unfortunately, that's a change in U.S. policy. Now, I'm glad to hear that John Kirby said it's not a change in U.S. policy, and I hope that they will continue to connect those two issues. But that's not the text of the resolution, and that's why Hamas celebrated the resolution and welcomed it. That's why Iran welcomed it. Believe me, any resolution by the UN Security Council that Hamas welcomes is not a good resolution for Israel.
Minister, you were due to travel yesterday evening. Could you share with us what you said to the administration directly after that decision?
Well, I spoke to them. I haven't spoken to them after that decision. I spoke to them before that decision. When we first learned about which direction this was going, I did on, I think it was Sunday night. And when I heard what was happening, I said, look, you're going to have, it's the wrong message at the wrong time. I explained to you why it was the wrong message, because it's not connecting the issue of a ceasefire with the return of the hostages. And why is it such bad timing? Because we had negotiators in Doha trying to get an agreement to release hostages. And it's not surprising that Hamas decided to reject the latest proposal that was put forward by the Americans. Because why? Why should they not reject it? They think they're going to get a ceasefire without giving up the hostages, because that's what the resolution said. And I understand and I appreciate that the United States has said that's not our policy, but that's not the text of the resolution. And that's the problem. And I told them before, if this would be the case, I would find it very difficult to believe that the Prime Minister would send a delegation to Washington. Why? Because the purpose of us going to Washington was to discuss and to actually listen to American ideas of how we should go into Rafah, the other ideas that they said they had without a major military operation in Rafah. What message, John, is it going to send to Hamas that the day after that the Americans separate these two issues and say, you know what, you can have a ceasefire without a hostage negotiations, and then the United States is presenting its proposal how we should not go into Rafah? That's a real big problem, and that's why the Prime Minister made the right decision to stop the delegation, which I was leading, to go to Washington.
Okay, so this trip was suspended. Is there any plans for you to come to Washington then in the future?
I don't know. We'll have to discuss it with the U.S. administration. We haven't had those discussions yet. I think the context here was particularly problematic. Obviously, the U.S. has ideas. And I'm sure they'll share it with us. I don't know if it'll be in a delegation in Washington, people coming here, us speaking over the phone, but they have ideas that they want to present to us. The president asked the Prime Minister of Israel to send a delegation so that we can hear their ideas. We have our defense minister in Washington now. I'm sure he's discussing this with them. But I think the timing was particularly problematic because of the message that this UN Security Council resolution was sending. It was a very, very bad message, both for the hostage negotiations, and also we have to be very clear with Hamas. We have to be very clear that we're going to fight this war until the end. And the last thing we want them to believe that the international pressure on Israel will get us to simply not finish the war. That's not going to happen. Now, I don't decide what the United States will do or won't do. They're a sovereign government. They'll have to make their own decisions. But Israel has to make clear to Hamas that we intend to fight this fight till the very end. And hopefully that pressure, their understanding that we're going to fight this to the end, will enable us to get to a hostage deal.
Well, the Israeli defense minister, as you say, is in Washington. We have Benjamin Netanyahu, the prime minister, approving a Rafah operation, but the Israeli defense minister said he had a good meeting with officials in Washington. Did anyone convince anyone on either side to change?
Well, look, we've been in discussions with the U.S. administration for a long time. The initial U.S. policy was essentially not that they're against an operation in Rafah full stop. What they said initially was that Israel has to make efforts to get the civilians out of harm's way and to ensure that humanitarian assistance can get to them. And guess what? We agree. And we've been working on a plan to get the civilians out of harm's way and to ramp up humanitarian assistance to them. So this is something where the two governments should be able to get to common ground and should be able to get on the same page. Now, if the position of the United States is there should not be a major military operation in Gaza, then we're not going to be on the same page because we have to go in to Rafah. We have to finish the job. We have to take care of these 4 battalions. We can't leave 20% or 25% of the Hamas force in Gaza so they can simply reorganize and come back. And Israel's major military operations actually have enabled us to do much smaller operations and achieve great success. Look at what happened in Shifa Hospital. I don't know if you're following that in the northern part of the Gaza Strip. We were there a few months ago and we did a major operation. Just now, we went back last week, and we have done one of the most successful operations in Shifa Hospital in our history. Nearly 200 terrorists were killed there. Over 800 terrorists were captured, and there have been 0 civilian casualties. In fact, there have been more Israeli soldiers, too, who have died in that operation than civilian casualties. Why can we do that? And I think this is a very important point for your viewers to understand. Because once you do the major military operations, once you crush these battalions and defeat them, Israel has to come in with a much smaller force, much more careful military operations, and achieve great success. That's why it's so important for us to go to Rafah and to finish the job.
You keep saying fight this until the end. People have already talked about when you have people living in dire situations, people who've seen their loved ones being killed, that breeds extremist type of behavior. And you're already seeing that in certain places, that even if you kill Hamas, something else will come in its place because there isn't leadership and there isn't a sense of what the future is. How do you counter those types of discussions? How do you say there is an end that you have in sight?
Well, first of all, understand what we're trying to achieve. We're trying to destroy Hamas's military in Gaza. They're not a terror organization in Gaza. They're a military terror organization in Gaza. And we have to crush their military, and it's divided up into battalions. And we're doing that, I think, very well. But what you just said about it breeds extremism, I'd ask you, do you think that the action of the United States against the Nazis in Germany, do you think that bred extremism among Germans? Do you think the actions of the United States in Japan bred extremism? I mean, you were smart enough to, first of all, finish the job and win the war, and you demanded unconditional surrender to achieve it. And then you were smart enough to be magnanimous in victory and provide a different path for the future. But you have to finish the job. If you do not finish the job, the situation will actually be worse. You have to finish the job, defeat them, and then you can talk about a day after. Then we can talk about how we can expand peace in the region, what we should do in the long-term prospects of Israelis and Palestinians. But there will be no day after Hamas if Hamas is still there. That's why we have to finish the job.
I guess that one of the key questions that has been kind of hanging over this is we don't have a clear sense of how you provide that type of structure in any way when you don't have that being provided with respect to who's going to be the leader, with respect to who's going to provide the financing, with respect to even whether there'll be 2 states and what that will look like with certain land in the West Bank being seized. So how do you address those kinds of questions that do need to be put into place before you finish the job?
I don't believe they have to be put in place before you finish the job. In fact, I think just the opposite. I think if you try to put that in place now, you could actually undermine the effort to get to a real good day after plan afterwards. Because first, everybody has to understand that Hamas in Gaza is finished. Until they understand that, no one will step forward. So you're going to actually have a plan that's going to be stillborn. The second you win, that's the time when the international community, obviously led by the United States, Israel, Arab partners in the region, have to come in and say, okay, what do we do now? Now Hamas is defeated in Gaza. What is the next step? To think that anyone is going to emerge now, when you have 4 terrorist battalions of Hamas in Gaza, maybe around 15,000 terrorists fighting there, and that somebody is going to step forward, kidding themselves. We saw what happened in the northern part of the Gaza Strip when we try to work with local actors. Hamas took them out and executed them. That's what's going to happen until we finish the job. That's why I think it is in the interest of all countries who not only are interested in Israel's security, but interested in a better future for the Palestinians, to get Israel to finish the job as quickly as possible so we can move on to a day after. And the truth is, we have real partners in the region for that day after. I think the Saudis are a partner. I think the Emiratis are a partner. I think they are starting, and they've worked to de-radicalize their own societies. I think we need to look for them and to their leadership to see what we can do in a day after. And then we can talk about all of those political issues. But first, we have to get to a day after. We have to finish the job. You cannot leave that force in Gaza. It would be like, as one Israeli
Take a look at the market wrap.
said,
After
Mr.
2 days of
Gates, he said it would
losses,
be like,
US equities were poised to rise as investors looked to US
fire,
data to
leaving
determine
20%
whether
of
there
the
was still
fire and
potential
simply
for the
hoping that
recent
it's not
advance
gonna
to
come back.
continue.
Of course it'll come back.
S&P
We have to
500
douse
futures
these
increased
flames,
somewhat
and then we can talk
following
about
Wall
the day
Street's
after.
drop on Monday,
Minister, I know we only
while
have a few
European
minutes
stock
left with you.
markets
I had a
remained
few
stable.
direct questions to work
The
through
dollar
with you,
declined
if
versus
I
the
may.
majority
The
of its
Vice President
G10
of the United States
counterparts,
spoke over the
while treasuries
weekend.
remained
Here's a quote
unchanged.
from her.
This
Any
week,
major
there has been an
military
increase
operation
in
at Rafah
concern
would
over
be a
discrepancy
huge
between
mistake.
share
I'm
prices
not
and
trying to
profit
understand
estimates.
from your side
Prior
why
to the
you think
government's
that's not a
carefully
mistake.
watched
I'm trying to
personal consumption
understand now
expenditures
what the
price index on
consequences would
Friday,
be if you
when
cross
many
that
markets
perceived
will be
red
closed
line
for the
now.
Easter
Have they
holiday,
communicated what the
US
consequences would be
durable
for
goods and
Israel
consumer
and the
confidence data
relationship
are
between
scheduled
you
to
and the United
release
States? Have you
today.
heard anything whatsoever?
The Fed Powell's is scheduled to
No,
speak on that day
they
as well.
haven't communicated that with us, but
According
I can
to
tell you,
Bank of
John, what the
England's man, the
consequences will
markets
be
are
if we
perhaps
don't
a
go
bit too
in and
complacent
finish the
about
job.
how long
It'll
the
be
Bank
that
of England
October
will
7th
hold
will happen
rates.
again and again and again. People in the United States have to understand that the people of Israel see what happened on October 7th as an existential threat to the country. And I'll explain to you what I mean. It's not because I think Hamas can destroy the state of Israel. They cannot. But if we do not destroy the terror organization that did that on October 7th, if we do not take them out as a military organization in Gaza, then I truly believe that this country has no future, because all the buzzards who are circling around Israel and are looking to see what's going to happen to Hamas after they perpetrated that attack, they have to understand that Hamas is a terror organization in Gaza as a military is finished. You know, there are American officials. This happened a couple months ago. A senior official came and he said, you know, Hamas is an idea. And you can't destroy an idea. And I countered by saying, you know, Nazism is an idea. And there are Nazis in Charlottesville walking around with tiki torches that they bought at Bed Bath & Beyond, but they don't have a state called Germany. ISIS is an idea. And there are people who follow ISIS. You saw the attack in Moscow just a few days ago. And there are black flags that are in bedrooms, probably not just in the Middle East, but in Europe and even places in the United States. But they don't have a state. They don't control the territory of a caliphate between Iraq and Syria. It is one thing to deal with a terror organization. It's another thing to deal with a military that is a terror group. That's a total different story. And we're going to dismantle Hamas's military regime in Gaza. It's going to happen. And I would like to have the United States by our side. They've been there for the last 5 months, 5.5 months, with critical support out of the gate. The moral clarity of the president calling Hamas sheer evil, worse than ISIS. The fact that they sent aircraft carriers here. The fact that the president himself visited 10 days into the war when we could have had an escalation in the northern part with Hezbollah. So they've done very important things. And what I have implored them is to stand with Israel until the end, because we're going to achieve this victory. And I think it's not only in Israel's interest to achieve that victory. I think it's in America's interest to achieve that victory, because they've been part of this they've been part of this victory up until now. And now we're down the home stretch. I think stand with us. Let us finish the job. And let's get to a day after where we can actually have a real peace process that can give hope, not just to Israelis, but also to Palestinians.
Minister, this is a conversation that you and I will have to continue that requires a heck of a lot more time than the 10 minutes we just had. Ron Dermer, thank you, sir, for joining us today, the Israel Strategic Affairs Minister. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. A massive search and rescue operation is underway in Baltimore this morning after a container ship struck the key commuter bridge in the early hours. Emergency services say 2 people have been removed from the water. 1 was seriously injured.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we have.
Maryland's Governor Wes Moore has declared a state of emergency. Traffic has been suspended around the area, with motorists advised to avoid the I-695 interstate. In a statement earlier this morning, Maersk said the container ship Dolly was operating under its charter. Baltimore ship traffic through the port has also been suspended as the rescue and cleanup operations continue. And Donald Trump is now among the world's 500 richest people. Trump's social media company wrapping up a multi-year merger process, giving the former president billions of dollars worth of shares. At the same time, a judge slashing the amount of a bond payment Trump owed by several $100 million. Trump's fortune had previously peaked at around $3.1 billion. His net worth now climbs to a new high of $6.5 billion. That's your Bloomberg Brief. John?
Johanna, thank you. The opening bell about 1 hour and 40 minutes away. Equity futures right now on the S&P 500 near session highs, up about 1/3% on the S&P. Under surveillance this morning, tighter for longer.
Neutral for a while, but between 425, 450, we have been adding duration. We've been slowly adding to that duration position. Clearly, spreads are extremely tight, but one has to look for pockets of value wherever we can find them. Unusually and terribly tight, let's say right now, on most of credit spreads.
Here's the latest this morning. U.S. corporate bond spreads are the tightest level in roughly 2 years, with a chance of tightening further as the Fed signals it's on track to start cutting rates. Megan Robson of BNP Paribas expecting, quote, a credit soft landing, 2 to 3 rate cuts providing some relief for financing costs, while rates will still be high enough to encourage yield buying from investors. Megan, I'm pleased to say, is with us around the table. Megan, can you describe that? And good morning. Describe what is a credit soft landing.
Well, thank you for having me. So credit soft landing to us means we won't have a default or downgrade cycle and essentially skip the downturn phase of the cycle. And as you just described, we are seeing signals of a credit soft landing play out. And I think the Fed messaging last week, which we interpreted as very dovish, really reinforced that sentiment in the market that we can still get 3 rate cuts despite some of the hotter inflation data, which will continue to support credit markets both on a fundamental basis and on technicals.
Are we priced for a credit soft landing, or are we priced for a credit nirvana?
Well, with spreads at the tights, a lot of optimism is certainly priced in. We do think we've overshot our spread targets for the year, but we're relatively close to where those are. I think in April we are expecting the technicals to be very supportive, so potentially can grind further from here. But you know, the argument to buy credit from this point is not spread upside. It's really more of a carry story where you're buying credit to earn yield.
Which creates a really interesting question. Do you go into the higher quality debt that has pretty narrow spreads and don't get as much all-in yield? Or do you go to some of the riskier debt where all of a sudden companies might have less of a perfect soft landing, given that they haven't yet really faced refinancing costs that are much higher than where they used to be? Is that the correct trade, to go down and to go into some of these riskier companies?
I think it really depends on the market. So in investment grade, we do like reaching into lower quality. So we have an overweight to triple Bs. Even though triple Bs have already outperformed, we think that you're still getting that pickup in carry and spread, and fundamentals look good. Within the high yield market, we think you have to be much more selective. So even though spreads are at 2-year tights, underneath the surface, you can see distressed ratio, or the number of bonds trading over 1,000 basis points, has climbed higher, and it's unusually high for this type of environment where people are so optimistic. So I think that tells you are seeing some of these issuers, lower quality, struggle.
So earlier this week, or actually last week, Bob Michael of JP Morgan Asset Management came on the show and said he's really changing his tune when it comes to investment grade debt, but also more broadly with respect to private credit and how much that's been sort of a stabilizer for the overall U.S. credit market. Do you agree that this is actually a source of stability not necessarily a source of potential hidden risks that are out there that are sort of pockmarking the landscape.
So I think private credit was a source of stability last year when syndicated public markets were closed, and it provided an avenue for some issuers that couldn't access high yield, traditional loans, that could actually borrow. This year, I think the story has changed where there's such a competition for capital that you really have started to see the competition between public markets and private markets drive credit spreads tighter, start to make covenants a little bit less strong. And unlike the past when you saw bilateral loans between one private lender and one issuer, now you're seeing it look much more similar to public markets where there's lending groups including private and public lenders. And I think over time, you're going to see a convergence of those two markets, and it does create a bit of froth with pushing spreads tighter.
Megan, just getting some breaking news, so just got to run briefly. Megan Robson there of BNP Paribas. The latest from ABC News this morning on the major Baltimore bridge collapse. Getting some more details for you. If you are just tuning in, waking up to some tragic images coming out of Baltimore. The collapse of the Francis Scott Key Bridge following a collision with a ship. Learning more details in the last few hours about the nature of this collision. This from ABC. I'm quoting them directly. An unclassified cybersecurity and infrastructure security agency report said the container ship Dali lost propulsion as it was leaving port and warned Maryland officials of a possible collision. The crew notified officials that they had lost control. This report goes on to say that the vessel notified MD Department of Transportation, MDOT, that they had lost control of the vessel and a collision with the bridge was possible. The vessel then struck the bridge, causing a complete collapse. Just getting a little bit more colour, AMH, in the last minute or so.
Yep, and there's reports also talking about the fact how this waterway into and out of the port has been closed. There's no other route into the port, second biggest port in the mid-Atlantic. But ABC, looking at this unclassified cybersecurity infrastructure security agency, starts to show sort of the story of what went wrong. They actually alerted Maryland officials that this collision could possibly happen and that they actually lost control of this vessel.
Lisa, just getting more details in the last 5 minutes or so.
Yeah, I'm looking at this. It was 1:30 a.m., which is the one silverish or not terrible lighting because there were fewer people that were on the bridge. But right now, the idea that there was a warning that they had lost propulsion, that they could potentially hit the bridge, it raises a lot of questions. What could have been done? Is this precedented? How do you just lose propulsion? How is this something that gets checked or not before leaving the dock? A lot of questions remain.
The latest from the White House, the president has been briefed. Biden to get updates on the bridge throughout today. More updates from us here at Bloomberg Television around about every 30 minutes or so. Coming up on this program, Peter Chi of Academy, Vijay Rakesh of Mizuho, Andrew Honhorst of Citi, and Robert Crandall, the former American Airlines CEO, breaking down his experience with Boeing, ultimately what changed in the last decade or so, and the pressure from airlines to make a change at the top of the company in the last week or so. That's the stage set for the next hour on Bloomberg Surveillance. Here's the price action for you on the S&P 500. Equity futures positive by 0.4%. Yields going nowhere. The 10-year 424.15. In foreign exchange, the euro just a little stronger against the dollar. Euro dollar 108.58.
In a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we can start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now.
So just a reminder, at 8:15 a.m. Eastern Time, we get Bank of Canada's Rogers speaking.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on
Secured overnight financing rate unchanged at 5.31%.
business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bank of Canada's Rogers on the wires here, saying that Canada urgently needs to boost productivity to help hedge against the risk of higher inflation.
I think it will come down. I'm not anticipating a re-acceleration.
They also say that productivity in Canada is hampered by lack of investment, lack of competition, inability of new Canadians to use the skills they have. In wake of the pandemic, we thought productivity in Canada would improve. It hasn't happened yet. Productivity is a way to inoculate the economy against inflation. An economy with low productivity can only grow so quickly before inflation sets in. Rogers further says that in future, inflation may be more of a threat than it has been over the past few decades.
Good morning for our audience worldwide. This is Bloomberg Surveillance, the latest overnight, waking up to some stunningly tragic pictures coming out of Baltimore.
Rogers says that the level of productivity in Canada's business sector is more or less unchanged from where it was 7 years ago. That said, investment levels were also weak in pre-pandemic years, when rates were much lower than today. More recently, we've heard from firms that say current interest rate environment is making financing more difficult.
Going for a long time. This is a large water area, subsurface, and the deck of the ship involved still needed to be searched. They were able to remove 2 people from the water. The latest information is they're looking for upwards of 7 individuals. Naturally, when you see images like this, you'll be wondering what went wrong. So first of all, we heard earlier on this morning from Maersk that the ship it had chartered caused the bridge collapse. And you can see this in the image that we received, colliding with the bridge and leading to its collapse. This is what we've learned in the last 15 minutes or so. This came from the team over at ABC, so I'll quote them directly for you. An unclassified cybersecurity and infrastructure security agency report said the container ship Dali lost propulsion, Lisa, as it was leaving the port, and warned officials of a possible collision.
There are a lot more questions that we will be investigating. This, to me, raises also a concern about what the inspection process is like. This ship was just starting a 27-day journey to Sri Lanka. This was the beginning of a long journey. There also are questions now about what this means for one of the busiest ports on the East Coast and whether this does kind of create delays on a whole host of fronts. And I mean, honestly, the region is really dependent, actually, on this waterway.
Absolutely. It is a huge Bridgeport is a very important waterway. I was there actually with Biden when he wanted to talk about not just infrastructure, but also some of the supply chain hiccups we were seeing coming out of the pandemic. The president has been briefed on the matter and the collapse of this bridge, the ongoing search and rescue efforts. He'll continue to be briefed throughout the day and receive these updates. We heard earlier on that the White House did not see anything nefarious, Jonathan, when it comes to this vessel hitting the bridge. But clearly you're going to see a huge interagency response. We heard that as well from Governor Westmore of Maryland.
When we get more details for you, more headlines, we'll share them with you immediately, and expect regular updates in this hour, roughly every 25 minutes or so. Equities right now on the S&P 500 as we count you down to the opening bell, shaping up as follows. About 87 minutes away from the opening bell. Equity futures are positive by 0.4%. Yields are just a touch lower, down almost a basis point on a 10-year, 423.75. In foreign exchange, the dollar a touch weaker, euro a little stronger, 108.57 on that currency pair. Coming up this hour, Peter Cheer of Academy Securities on why he thinks stocks are behaving like stonks. He can explain that. Citi's Andrew Hollenhorst looking ahead to Friday's inflation data, and former American Airlines CEO Bob Crandall on what's next for Boeing. We begin with our top story in the market. Investors on hold ahead of more data that could show whether the rally has gone too far. Peter Cheer of Academy Securities saying the market is trading like a meme stock, writing this: I was wrong on how much we could bounce last week on apparent global central bank easing. We seem to whip around 1% like it's nothing. It is like trying as you can to seem really smart for a day or two, then really stupid for less of an apparent reason. Peter, I'm pleased to say, joins us now. Pete, good morning to you.
Yeah, good morning. How are you?
I think I remember you saying clearly that there was more chance of a 10% drop than there was a 5% rally. Clearly that wasn't right. Why has this market been so difficult to read from your perspective?
It feels like there's very little liquidity. So you watch during the course of the day and you see kind of these sharp declines, sharp rallies on, I think, very little volume. So I think that's made it very difficult. We've come to an age where it's clearly not meme stocks, but you have some of these very large market cap stocks trading quite volatile. And now you actually have a reasonably large 2x leveraged ETF on a single stock, which I've never understood why we would need something like that. So I think that's just amplifying these moves, making it incredibly difficult.
I'm guessing that stock is NVIDIA.
It is.
Yeah, based on the performance we've seen, I can see why some people might want to lever up. Not extrapolating out, all of that stuff, history, you know what I'm saying. Anyway, Pete, I want to get your thoughts on this. Rate cuts, not a prerequisite for this market rally, clearly, based on the evidence of the first quarter of 24. Why is that going to change anytime soon?
I think it all comes down that we rallied through the rise in rates because the economy was doing well. So it's all been about the economy, and ultimately, really, it's all been about AI. It's the AI adoption. The AI companies have driven this, right? We don't have a Mag 7. We've got a couple stocks really driving it. We've started to see a little bit more of a broadening out, but I'm concerned we're at kind of peak AI in this cycle.
Noting here that the Canadian dollar holds on to earlier gains after the Bank of Canada speech, trading 0.2% higher at 1.3563 per US dollar.
I couldn't figure out how to do it with the AI. I saw a toothbrush that now has AI. So everything's kind of put this AI label on stuff. And it feels a lot right now where we were at peak metaverse. I think AI is much more serious. It's going to last much longer. It's a real thing, but it doesn't mean we can't have peaked right now.
I love that, this idea of a malfunctioning toothbrush and with an AI label. There is this issue, though, that the leading economic indicators of the Conference Board have actually turned positive for the first time in something like 25, 26 months. This is unusual and typically a sign of strength. How do you fight signs of true economic strength with this idea that the market is somehow divorced and already priced for something else?
Well, I think leading economic indicators have had it wrong for quite a while. So they were showing declines. And to me, they're a little bit too tied to financial conditions, to equities. So when equities go up, it tends to drive that. So I'm looking much more at what we're seeing in the job market. There, it's been a little bit less of a clear-cut story, right? We're a little bit more declines. So we'll learn a lot next week when we get job numbers and see how that's playing out. So the consumer, again, seems a little bit stretched. All of a sudden, we've gone through consumer credit was fine to it's back above trend. You're seeing delinquency still low, but now creeping back to more normal.
You said there's very little liquidity, and I want to challenge that because a lot of people have come on and talked about the wall of money and how there's just so much money that it's hard to bet against a momentum trade that has been really in some ways unprecedented. Where are you seeing a lack of liquidity at a time where this market seems flush with cash?
So what I look for is that intraday kind of trading liquidity, right? When you're having these very sharp and steep declines, and you look at how often, right, we gap up or we gap down, which tells me there's no true depth of liquidity. What we've been referring to it as full liquidity, or this kind of shark and minnow liquidity, where it looks really active and you can trade a lot, but if someone big comes through with a trade, it immediately moves. So it strikes me that there just isn't a true depth of liquidity. Everyone's just kind of day day trading around, which kind of fits with, we've seen the options trading has now outpaced stock trading. You've got the 0-day to expiration. So to me, everything is much more a trading environment than a pure liquidity environment.
So what are you advocating for currently?
You know, I want downside protection. I feel that we had the 3% move up, so we didn't quite get to the 5% last week. I feel that we're still much more susceptible to a very rapid 10% decline than another jump up. But definitely, unfortunately, kind of following suit with the trend, looking a little bit more to options. It's very difficult to trade this market, so you're looking at shorter dated options to try and express this view where you protect yourself against a large move.
I want to think about potential catalysts. Is that just the market falling on its own weight? What is the potential catalyst? Because at the moment, at least, for the first 3 months of this year, it hasn't been interest rates.
No, and I think my big concern is really it's going to be about China. And even yesterday, we had a bit of negative news when China was banning a couple of chips companies from selling chips into China. I think what we are going to see over the course of this year, and we've already seen some of it, is China is going to try and repress sales of Western brands into China so that they can bump up their own brands. We've seen that. Some of it's been kind of poo-pooed as, well, it's just China's economy slowing, so that's why they're not buying as many phones or computers or cars. I think it's much more of a pattern that we're seeing from China, and then you start looking at what they're trying to do in terms of selling their brands, not just domestically, but globally. I think France went after Shine, which is another company. Temu's out there. So I think that's going to be the real pressure, is it's going to force U.S. companies to, one, have fewer sales in China, possibly fewer sales in emerging markets, and maybe compete on price, which just isn't great for current valuations.
But made in China, does that resonate to other markets?
So we've been calling it made by China. So if you think, everything was always made by China, right? We took our products, had them manufactured in China, and then we sold them. Now China's trying to sell their own brands. And you would think, no, but you go Israel, I believe, BYD is the second most popular EV there. They're starting to sell that. Huawei is everywhere. So they've had some degree of success. And as you start looking at Shine and Temu, you realize at some level price matters.
Well, just taking a step back and sort of pulling this all together, there's a question of what the catalyst will be for some sort of reality check on markets. And it goes to this increasing division between the U.S. and China with this question of how much can the U.S. really look inward, create more industrialization within the country at a time where it's clearly lacking a lot of investment. How much spending capacity does the U.S. have before we start to see it reflected with higher bond yields?
One, I think that's coming, right? We go through the deficit. And then I think back to your question about this kind of ongoing friction, I would say where I get a little bit of disconnect when we talk to corporations, I think corporations are still trying to figure out, okay, how do we take advantage of selling into China? How do we work with China? And it's definitely nowhere close to what it was pre this. But when I talk to, Academy's got 18 retired generals and admirals who serve as our geopolitical intelligence group, when I'm talking to them, they're all about China right now. And if you just look at CISA put out something on living off the land in this Volt Typhoon, which is supposedly critical infrastructure, but they're specifically targeting the People's Republic of China, the Communist Party. They're saying that. So I think DC, what's going on there is such heightened awareness of this friction and ongoing battle with China that it hasn't fed to corporations yet, but that will come out, I think.
How do you think that's going to come out? What do you think that looks like?
I think we get more and more tit-for-tat sort of policies where, well, you can't send your semiconductors here. Well, then you can't send them here. You can't do this. And I think that's the way we're headed. And at the same time, we're going to see more and more pressure, I think, from China on their, the countries that they have big trade deficits to push their brands. And I think that's going to be the weak spot, is emerging markets countries who've been selling a lot of commodities to China have these trade surpluses. I think that's the back door where China really starts aggressively selling their brands and has a great degree of success.
So last time around, and I know this is on Lisa's mind, last time around we did this, there were these warnings of runaway inflation. Didn't happen. Now I hear the same warnings again. Is it different this time?
Yeah, I'm not particularly concerned about runaway inflation. I think we've seen peak in goods inflation kind of was quick. It's slowing down on the services side. It was just a longer kind of COVID bump that's taking longer to play out. I think there's inflationary pressure. We've got some geopolitical risk out there. I think Iranian oil is, a potential target where that would cause oil to price up. I do think as we kind of do this reshoring, that's going to be inflationary.
Former president, 60% tariffs, gets a second term. What does it mean?
Again, I think that fits with this whole battle. And I go back on this. I remember when the President Trump at the time put out the tariffs, a lot of economists were against that, said it was the worst thing ever, starting a trade war. Our position at the time had been that we'd been in a trade war for 20 years and just not fired a bullet. And ironically, not one of those tariffs has been taken off, and some additional things have been going on. So I think if you take away the bipartisanship or the partisanship and go to what's national security, at national security, both parties, I think, are now very fixated on China and very concerned about where they're headed technology and what they can do to us. And that's going to drive policy no matter who wins the election.
Pete, this was great. Just fantastic to break down some of these issues. Lisa, we've been talking about this for a number of months now. What's interesting is when you have this conversation with an equity strategist and you say to them, how vulnerable are multinationals? How difficult is life going to be? Kind of, no, everything's going to be, it'll be okay. They'll work through these issues. Keep going back to the same point. If that's the world they've got to live in, think about the world they have lived in for the last 20, 30 years. It's been uninterrupted globalization. They've been able to have progressive views at home in America. They've been able to entertain regressive views abroad in places like China and been able to sell products in both countries. Now you're having a cultural collision at home, not just abroad. Then you've got the extra issues of tariffs, etc. On top of that, China seems to be much more interested in domestic brands, and that patriotism that's come through the Chinese consumer is new in the last 10 years as well. I would say it's far more difficult now than it once was.
Which is interesting that today, or tomorrow rather, we're going to see the CEOs meet with Xi Jinping. How different is that conversation at this moment when it seems like that has to be on their radar? We saw yesterday AMD and Intel shares falling as a result of the potential restrictions of their use in Chinese government utilities.
Pete, I know you want a final word. Multinationals have had it their own way for a long, long time. It doesn't feel like that anymore.
No, and I would say two things. One, we're ignoring the fact that Huawei put out a phone that has a 7-nanometer chip, despite the fact they're not supposed to have 10 nanometers. No one seems to want to dig into that. Why? Because we don't want to find out what the answer is. That, to me, is a danger. And then the other side, the one thing I think corporations are talking about more and more, even before this tragic event today, is global shipping is no longer taken as a granted. I think when you're making business plans, you counted, okay, here's my shipping and here's a cost. And people are getting very concerned about global shipping. I think people are getting concerned about infrastructure. That's something that's going to have to be addressed. And again, I do think that pulls away from globalization and more to this reshoring, working with Mexico, working with South America.
Certainly learning that again this morning. Pete, good to see you. Peter Cheer of Economy Securities. On that note, let's get you the latest update out of Baltimore. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. A massive search and rescue operation is underway in Baltimore after a container ship struck the Key Commuter Bridge in the early hours of this morning. ABC News cites an unclassified cybersecurity and infrastructure security report saying the container ship Dolly lost propulsion as it was leaving the port and warned Maryland officials of a possible collision. Maersk issued a statement earlier saying the ship was under its charter. Emergency responders have rescued 2 people from the waters. 1 was seriously injured. The search continues for upwards of 7 people. Maryland's Governor Wes Moore has declared a state of emergency, and traffic has been suspended around the area, with motorists advised to avoid the I-695 interstate. Court movements have also been suspended. President Biden gaining ground in 6 of 7 key swing states this month, according to the latest Bloomberg Morning Consult poll. Biden seeing his biggest gains in Pennsylvania and Wisconsin, this following the president's State of the Union, which rallied Democrats and seemed to mitigate concerns about Biden's age. And Krispy Kreme shares are rising after McDonald's said it will begin selling their donuts in restaurants across America, marking the latest attempt by the burger chain to attract breakfast customers and all-day snackers. The chain said tests of customer appetites for the treats, quote, exceeded expectations. The donuts will be first available later this year, with a full rollout by the end of 2026. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, the latest on the tragic collapse of a major Baltimore bridge. That conversation up next. Equities on the S&P 500 firmer here by 1/3%. A little bit of a lift. Yield lower by a single basis point, 423.36. Under surveillance this morning, the search for survivors from that bridge collapse in Baltimore.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely
According to a poll, the Swiss National Bank to cut key rate 2 more times in 2024, say 12 of 23 economists. 6 say 3 times and 4 say 1.
7 individuals. That's the latest information we have.
It's the latest information now. Emergency services have rescued 2 people from the water, one with
Good morning,
serious
traders. It
injury.
is Tuesday, the
Governor Westmore
26th
has
of March,
declared a
and here is what
state
to
of
look out for
emergency.
today.
Port and motor vehicle traffic has been suspended as rescue operations
Data that might
continue,
either support
with
lofty
drivers
stock
advised to avoid
valuations
the
or cast doubt on the
I-695
long-term
interstate.
viability of a
Bloomberg's Amy
ferocious
Morris joins us
surge.
now from
The March
Washington. Amy,
indices
if we
of
could
US
talk about the
consumer
latest,
confidence and
please, the search and
manufacturing
rescue effort.
activity,
Just
which are
where
due on Tuesday,
currently?
followed by job market and inflation indicators later in the week, could provide insight into the economic and monetary policy picture. The rise came to a halt on Monday as investors were increasingly concerned that stock valuations were not justified by profit estimates and that they were unduly exposed to big tech. So at 8:30 a.m. Eastern Time, we get US durable goods forecast 1% on the prior, minus 6.2%, with a range of 4% and minus 2.5%. And US core durable goods forecast at 0.4% on the prior, minus 0.4%.
Nothing could have prepared them for the collapse of the Key Bridge. This is a major part of an artery right through this part of the country. I mean, people who live in Washington, D.C. and drive to New York City, that's how they go. They take that bridge, and nothing could have prepared them for this.
Amy, it's going to take some time to establish a very clear picture of what happened here and just what went wrong. There'll be a series of investigations, I'm sure. They could be drawn out. But I think we've put together just a few pieces in the last hour or so as to what happened. Amy, what have we learned?
What we have learned is that the ship, which was licensed by Maersk and under the Singapore flag, had said that it was going through a loss of power, that it was going through some sort of trauma on the ship. You could see the black smoke billowing from it. And the video that you may have already seen of the ship hitting the part of the bridge where it collapsed, all the power was going out. You could see the lights going on and off. It was a mess. They were unable to steer the ship. And so they sent out that mayday, they sent out that call, and that's when they hit the bridge. Now, what remains to be seen is why the bridge collapsed the way it did. Instead of just one part of the bridge falling into the water, the bridge fell in a sequence of events. It was almost like a domino effect falling into the water. The bridge is lost. I mean, there are parts of it that are still sticking up, but they are calling this a total collapse of this bridge. That needs to be investigated as well.
In the meantime, Amy, can you give us a sense of where people are going to be rerouted? You said this is a major artery for everyone who lives in D.C. and in the entire region going from D.C. to New York. What does that mean for congestion there? And what does this mean for congestion at the port that is one of the biggest in the East Coast?
Well, there are detours that are in place. There are tunnels through Baltimore that people can take. However, those tunnels do not allow tractor trailers that are carrying hazardous materials. So all of those trucks will have to be inspected before they can enter the tunnels. It's an option, but it's a very congested option, and it's also going to involve all of these inspections and law enforcement there. So it's going to be very, very, very slow. There are maps already online for where people can follow to try to find their way around this collapsed bridge, going way out west of Baltimore to try to get around it. Most people, if they're having to commute because of work, they might be better off just working from home. We all know that we can do that in most cases, but this is causing a tremendous mess. People are being advised just to stay put until they can figure out a better routes for people.
Amy, can you tell us a little bit about what kind of federal and state response we'll see? Who's actually going to be working on the ground?
We already know that the FBI is on the ground there. And let me clarify something. There is absolutely no indication that this was intentional, that there was any malintent, that this is terrorism. That was one of the first questions that was asked. No, there's no indication of that. Still, the FBI is there because this is their gig. This is what they do. So the FBI is there. We've got state, local, and federal law enforcement, the Department of Transportation, Secretary Pete Buttigieg already been informed, already getting as much information as he can. His office is helping as well. You've got Coast Guard, you've got sonar and radar and eyes in the skies, if you will. Everybody is actually all hands on deck for this, because this is something that our area has really never seen before. It is highly unusual to have a landmark like the Key Bridge in Baltimore just disappear.
Amy, you raised this question. I think it's worth exploring without going too deep into the realm of speculation. To see a collision like that in these pictures lead to a catastrophic collapse of the whole bridge almost immediately will naturally raise questions about the safety of some of these bridges across this country. Now, we can maybe put this particular incident to one side and allow the investigators to do their job. But as you look across the country right now, how big of an issue is that?
Isn't it an enormous issue? That was the first thing that most people asked about was, wow, if this bridge can fall just from this collision, what about the bridges that I take every day to work? Infrastructure has been an issue with the Biden administration from day one, and the money that's been poured into infrastructure has not stopped. It is still coming through. However, this is something that they're going to be
At
investigating.
8:30 a.m. Eastern Time, we get US durable goods forecast 1% on the prior, minus 6.2%, with a range of 4% to minus 2.5%. And US core durable goods forecast 0.4% on the prior, minus 0.4%.
That is a question that still needs to be answered, but the investigation is ongoing. The priority, however, of course, is the safety.
Amy, thank you for the update and the search and rescue effort ongoing. Amy Morris there in Washington on the latest. Naturally, there's going to be tons of questions, Lisa, one of which would be, when there was a loss of propulsion, how much time was there between then and the collision? How much time would they have had to shut the bridge down and make sure there was no vehicles on there?
And whether this ship was inspected before a 27-day journey to Sri Lanka, and then what other bridges were constructed by the same construction company and architect, potentially?
Yeah, it's going to take time for that investigation to come together. The focus, of course, from officials at the moment is on the search and rescue effort. Equity futures on the S&P 500 positive here by a third of 1%. Up next on the programme, a sprinkle of economic data and reaction from Andrew Holmhorst of Citi.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, well, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with
1 minute remaining. I'll lead with U.S. durable goods.
And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Ten seconds.
Mike McKee around the table. Some economic data due in about 20 seconds' time. Going into it, the scores that look like this. Equity futures are positive by 1/3 of 1% on the S&P. On the NASDAQ, up 1/2 of 1%.
1.4%, 1.4% higher than forecast, 1%. Core durable goods, 0.5%, 0.5% higher than forecast, 0.4%.
Single basis point to 423.16. With your economic data, let's get to Mike McKee. Good morning, Mike.
Good morning. Well, we have durable goods orders out this morning, and normally they are something that would give us a clue about business spending, but they do get heavily revised, and Boeing has affected them a lot. The headline number comes in up 1.4%. The ex-transportation up 0.5%. So there's certainly some sort of Boeing connection there that we'll have to look at. The capital goods orders, non-defense ex-air, a strong 0.7% gain after a flat reading last month. Now, capital goods non-defense ex-air is kind of the proxy for business spending that goes into GDP.
According to a StatsCan flash estimate, Canada February wholesale trade most likely rose 0.8% from the previous month.
Or suggest subtraction from GDP. I'll take a look while you guys are checking the markets. I will take a look at what it is that moved this and see how much Boeing might have had an influence on the overall number.
We can run through the three boards, and let's start with equities on the S&P 500. Still basically trading where we were, up 1/3 of 1% on the S&P, likewise on the NASDAQ. In the bond market, let's take a look at the front end of the yield curve. The 2-year yield still a little bit lower on a session at the front end. We're down by 3 basis points. On this screen, on a 10-year, we're down by about a basis point to 423.56, raising some questions, Lisa, about just how many cuts we should be pricing out right now, given how strong this data is.
Well, this has been the continual question, which is if you have a robust economy that's showing signs of green shoots, we heard Matt Kettner saying early cycle, are we really talking about rate cuts? At the same time, a real question here about inflation, and is this inflationary, especially given that some of this is just delayed spending?
Mike, second read on things, what is it?
Well, it looks like there was a significant Boeing effect. Now, Boeing sold 15 airplanes in February, but that was 12 more than the month before. So non-defense aircraft up by 24%.
And we have posted the U.S. durable goods February 2024 full report on the feed for all those interested.
Also, we saw a big turnaround in autos, transportation equipment up. The motor vehicles are up 1.8%, new orders and shipments up 1.5%. I bring that up because the Port of Baltimore is a place where most of the East Coast imports of autos come through that port. So this could be something that gets interrupted significantly.
You know, just to sort of follow on and to rip up the script, as Tom Keene would say, how much would greater investment in infrastructure and greater investment in trying to shore up some of these areas that are likely going to get disrupted potentially for a temporary period of time or even longer, how much is that inflationary?
It depends on how it's spent and over what period. It's probably not significantly inflationary. Brookings Institution does a fiscal policy monitor, and they calculate how much additional fiscal help is going into the economy. And right now, they're saying that it's actually negative. The fiscal spend is negative for this year so far and for last year. So we've really dropped off from what we were doing before. But the money is being spent over a longer period of time, and that's where the benefits will come over a longer period of time, that eventually it will be disinflationary if they get this all done.
So basically we were having 2 Big Mac meals, we're just having 1, but we're not on a diet, are we?
Yeah.
I mean, that's the way I'd summarize things in DC. We're comparing things to pretty extreme deficits, aren't we?
Well, this is going to be an interesting situation because location of this bridge and the situation that we're going to be in terms of transporting stuff will push Congress, I think, to do some emergency funding for this bridge. We were talking just before the show about how bridges have fallen in recent years, Minneapolis, Philadelphia, and the Bay Bridge after the earthquake, and they get rebuilt much more quickly than they were built in the first place. It took 5 years to build the Francis Scott Key Bridge, and hopefully they can get some kind of replacement going much more quickly than that if Congress will throw some money at it.
It could be a lot of disruption in between. Mike McKee, thank you, sir, breaking down the data. More upside surprises in America. Let's get to the chief US economist, Andrew Hoddenhorst, to break down some of this. Andrew, you were listening to Mike McKee's breakdown of the data. Your first reaction to it, please.
Yeah, I mean, I think like Mike, I would emphasize that these numbers have really been bounced around by aircraft, by autos. You want to kind of look at the core of it, and what are we seeing at the core is weak, not too exciting, not too positive on the shipment side. We saw that this morning again. I think if you look at the various manufacturing diffusion indices, they've bottomed, they've come off of the bottom, but they're still sitting close to contractionary territory or in contractionary territory. So I don't think we're really changing the narrative around CapEx here.
We're all super familiar with your research. One theme that's come up throughout this year, and I keep seeing it in every single note that you send out, this economy is going to slow down by such an amount that this Federal Reserve is going to need to cut interest rates. You're still thinking about end-of-cycle type stuff, dynamics that are going to become more apparent and obvious through the year. What's leading to that conclusion for you?
It's really the labor market. It's really what we're seeing in the labor market, where you're seeing things like hours worked that are coming down, a hiring rate that's coming down. I think that's why we heard Chair Powell saying in his evaluation of the data, it's not that we're weakening yet, and I would agree with that, but the labor market is his emphasis in terms of a point of concern. It would be mine also.
So do you think that at this point he had the right message? The market's gotten
U.S. Treasury yields edge up after data. 10-year yield down 0.6 basis points on the day at 4.247%.
Powell tried to do, and that the committee is trying to do, is to get away from responding to each individual data point as it comes in. That's a very difficult way to set policy. They're kind of trying to tell us that we're on a path to get to rate cuts now. Inflation has come down enough that they think that they can be cutting interest rates. Now, it's not at all clear that inflation's returned to 2% with some of these supply-side disruptions. It's a good reminder of why there's still upside risk to inflation.
Let's sit on that for a minute, because really this is really dominating my thoughts right now is the Baltimore Bridge and what that means for infrastructure spending, what that means for some of the importance right now of getting more spending passed rather than less at a time with the deficit, as John rightly said, is like having 15 Big Macs. So at what point do you see this as an inflationary type of impulse where the U.S. has to keep borrowing, to keep investing, to prop up certain industries at the expense potentially of bond yields and inflation?
Yeah, this comes back to the idea of fiscal space, right? We usually don't really worry too much about fiscal space in the U.S. because politically there always seems to be more space to do more spending. But when you've already done a lot of spending, when you've already put a lot of stimulus into the economy, then when you have real shocks to the economy, clearly no one would disagree that we should be rebuilding this bridge, that we should be investing in infrastructure. But that spending, to John's point, is going to come on top of a large deficit that we're already running. So I think that's where you really get into difficulties, potentially politically, but also economically, is that also increasing price pressures in the short term. In the long term, investing in infrastructure is going to be deflationary, positive for productivity. But in the short term, you need to hire people. You need to source materials and inputs, and that puts upward pressure on prices.
Public debt situation most urgent I can ever remember is from Larry Fink this morning. What do you think this does in terms of the impact of the dollar?
Yeah, I think that is something that's increasingly in focus. I think we saw a bit of that last year. We saw it maybe less in currencies. We saw it more in Treasury yields, where you had the 10-year yield that was upwards of 5%. And I think that was some foreign investor concern that is this a country that is going to run sustainable deficits? They certainly do not look sustainable right now. That's ultimately an issue for the currency also.
I want to build on Lisa's line of questioning around this port in Baltimore and what could develop in the East Coast in the weeks and months to come. Can you help us understand, just frame briefly, how strong the tailwinds are, the disinflationary tailwinds in goods at the moment in America? Because there was some sign in the last few months that maybe that's fading, and I just wonder how vulnerable we are.
Bank of Canada's Rogers says the Bank of Canada would be happy if productivity rate could rise to around 1%.
Really important thing to draw attention to, because a lot of the disinflation that we've had has been that goods price disinflation, and that was energy prices coming down. That was supply constraints that had been constraining supply and boosting prices that were relaxing. look at where we are now. We have gasoline prices that are rising, that are projected to rise further into the summer. We now have this supply side disruption related to the port in Baltimore that would also indicate that, if anything, goods prices could be higher. We already know about the Panama Canal. We know about the Red Sea and the Suez Canal. And we saw in the last inflation report, to your point, core goods prices came up. They've been coming down. They came up in the last report. It doesn't mean they're going to come up in every report, but this period of deflation in goods that we've been in for the last 6 months or so, we're probably coming out of that now.
Do you think services can do the heavy lifting as that develops on the goods side?
So I think that's what you need to have happen to bring inflation down. So in some ways, this kind of idea that the labor market is softening, you really need to see that continue to bring inflation overall down, which is a very unfortunate scenario. We'd like to have a strong labor market, and we'd like to have inflation come down. There's a reason it hasn't happened historically. If goods are going to be less disinflationary, less deflationary, then services need to pick up for that, and that has to be through a softer labor market.
What I hear from you is different to what I heard from the chairman. Is that fair?
I think that's fair.
So basically you're saying to get inflation back to target, we need a recession.
That's still the most likely way you bring inflation back to target. Is there some probability that you get a true soft landing? Sure, there's some probability. But I think what we're seeing is just consistent with the idea that wage growth is kind of stalled out around 4 to 5% by various different measures. If you want wage growth to decelerate further, the labor market probably needs to soften from here.
Do disruptions like what we're going to see inevitably, either on a very small term or potentially medium term, with respect to the Baltimore Bridge and shipping passages, we've seen shipping disrupted in general. Does that make it more or less likely that we'll get the recession that you're talking about to bring inflation under control?
No, so the worst thing that can happen for the economy, the worst thing that can happen for the Fed are these kind of supply side shocks, because what they do is they reduce the productive capacity of the U.S. economy and they boost inflation at the same time. So it's negative for growth, and it means you get higher inflation. It's different than a demand shock where you get stronger growth and you get higher inflation. That's kind of been where we've been.
But this goes to something that John was talking about. If we get that kind of stagflationary shock, which is essentially what you're describing, are the Fed's hands tied, or have they made it clear that they're going to err on the side of supporting the economy and the labor market over continuing the fight for inflation?
I think they're in a transition here, but what they're transitioning to is this increased emphasis on the labor market, on the economy. The idea, which we saw in their summary of economic projections, inflation can run closer to 3% than 2%, and they still plan to cut rates. That's what they have in their projections now. If that number sneaks up a little bit higher on core inflation at the end of the year,
State data shows that China iPhone shipments fell about 33% in February.
The Federal Reserve is basically saying they've got a higher tolerance for inflation. I'd love your response to that. We caught it with Barclays earlier this morning, who kind of pushed back against that view. Others have endorsed it. Mohamed El-Erian said this could be the beginning of a long story, but the beginning of a story that suggests this Fed is now targeting a range and not a point target. Can I get your view on that?
Yeah, I think implicitly that's true. Explicitly, are we going to hear Fed officials come out and say, you know what, we've gotten comfortable being away from target to the upside? I don't think we're going to hear that in the near term. But this idea that they can accept somewhat stronger inflation, I think everybody would basically say, yeah, 2.5% inflation, that's close enough to 2% inflation. Now, the problem that you get to is, well, is 3% close enough to 2.5%? Is 4% close enough to 3%? And we're kind of in that region now. I think it is a transition, though, where they're moving more towards this kind of labor market concern, economy concern, and the reality is that they will accept higher inflation.
The issue with that, and you know it well, once you begin to give signs, even if you don't say it explicitly, doesn't that make it harder to get back down even more?
Yeah, absolutely. This can easily lock us into, not just a short period, but really a new regime where inflation is higher, more elevated, and more volatile.
This is what Jim Bianco of Bianco Research was talking about yesterday. In fact, I'd go back almost a full 12 months. Richard Clarida, in a secular outlook for PIMCO, coming out and saying this Fed's going to accept 2 point something, which sounded controversial at the time, and it's almost consensus now on Wall Street.
And it's led to this incredible euphoria that people are pointing to in markets, because you're basically having the Fed that's got your back and you can eat your cake and have it too. What is the consequence of that? Is it inflation that's not 2 point something, but that's 3 point something, to Andrew's point? And then at what point does the Fed have to say, basta, enough. Like we gotta actually do something and hold rates higher.
Need to put an Italian on that FOMC, don't we? Andrew, thank you. Andrew Hornhorst of Citi. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. As we've been reporting throughout the morning, a massive search and rescue operation is underway in Baltimore following the collapse of the Francis Scott Key commuter bridge. ABC News reports the container ship Dolly lost propulsion and control, warning Maryland officials of a possible collision. Maersk issued a statement saying the ship was under its charter. Emergency services say 2 people have been rescued from the water. 1 was in a serious condition. They're searching for upwards of 7 others using sonar, infrared, and divers. Traffic in the port and surrounding area remains suspended. A Bloomberg News investigation has found examples of a growing black market for SpaceX's Starlink internet terminals. The access points have been popping up in territories ruled by repressive regimes including Iran, Sudan, and Yemen, while Ukraine has accused Russian forces of also using the services. Elon Musk says the company isn't knowingly providing the terminals to any of these countries. Former President Donald Trump's social media company is rising ahead of its first session as a publicly listed company. Trump Media and Technology Group will begin trading today on the NASDAQ under the ticker DJT following its merger with a so-called blank check company, or SPAC. The deal gives the parent company of Trump's social media platform, Truth Social, more than $275 million of much-needed capital, plus providing a windfall for Trump as he faces mounting legal and financial issues. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on this program, Boeing's C-suite overhaul.
We're going to approach this, number one, acknowledging our mistake. We fly safe planes. We don't put airplanes in the air that we don't have 100% confidence in.
That conversation up next.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
At 8:55 a.m. Eastern Time, we get US Redbook year on year, prior 3.4%.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
This is Bloomberg.
The opening bow, 43 minutes away. Equity futures positive by 0.25%. Once again, the data in America pretty decent. Upside surprise. Yields higher now by a single basis point on the 10-year, 425.53. Under surveillance this morning, Boeing's C-suite overhaul.
I didn't know what happened to whoever was supposed to be in the seat next to that hole in the airplane. I got kids, I got grandkids, and so do you. This stuff matters. We're going to approach this, number one, acknowledging our mistake. We fly safe planes. We don't put airplanes in the air that we don't have 100% confidence in.
It's the latest now. The CEO, Dave Calhoun, saying he'll step down at the end of the year. The news coming just days after major airline CEOs turned up the pressure on the plane makers board, demanding answers after a number of in-flight incidents. For more, I'm pleased to say we're joined by Bob Crandall, the former American Airlines CEO and chairman. Bob, you are a legend of the industry, sir, and we've got a lot to talk about. I want to start with this issue first and foremost, though. Boeing. Your dealings with Boeing, Bob, over the years, your experience and what you think changed in the last decade or so?
Well, I wish I knew the answer to that, and I suspect Dave Calhoun wishes he knows the whole answer as well. During the time that I dealt with Boeing, they were a very reliable supplier. They built great airplanes, and they did a great job servicing those airplanes. And in every case where we had any kind of a disagreement or problem, they stepped up and were very responsive. So our experience with Boeing, my experience with Boeing has been that it's a great company. And of course, everybody in America is worried about what happened. And as the airlines, the people that are running the airlines these days, the CEOs of the major carriers, are going to meet this week with members of the board of Boeing. And that's an extraordinary thing that has not happened in years past. And it's a reflection of how serious the carriers in this country regard this problem.
Bob, as a customer, what choice do you have but to stick with Boeing? Can you help us understand the decision in front of you? When
at 8:55 a.m. Eastern Time, we get the US Red Book year-on-year, prior 3.4%, and at 9 a.m. Eastern Time, we get the US Case-Shiller 20 year-on-year, forecast 6.13% on the prior 6.1%, US House Price Index month-on-month, forecast 0.3% on the prior 0.1%, and US House Price Index year-on-year, prior 6.6%.
So no airline ever wants to have an accident, and for the most part, U.S. aviation has built an extraordinary safety record. And so when you're looking at Airbus and Boeing as to purchasing airplanes, what you try to do is you try to find the best quality, the best price, the best operating costs, and when possible, you buy, if you're a big enough airline so that you can tolerate the costs of operating multiple fleets, you try to use the competition between those two manufacturers to sustain your own cost per aircraft or cost per available seat mile, and by competing them against one another. And that's what everybody wants. But table stakes, as I say, safety at table stakes. So without an absolute reputation for safety and consistency, you simply can't compete. And that's why everybody's worried about Boeing. We've got to get Boeing back to the point where it produces an impeccable product.
Bob, it's not just Boeing, though. We're also hearing about more small incidents and medium-sized ones at airports and questions about air traffic controllers and a lack of staff. Is this all just because of the pandemic? Is it just that we're hearing about these things and didn't used to? Or is it lack of infrastructure investment? Can you identify why we're hearing more about the bread and butter of the industry being challenged, which is safety?
Well, I think we're hearing a lot more of that for several reasons. One of them is the Congress's failure to raise taxes enough so that the U.S. government has enough money to do the job properly. We have been underinvesting in our air traffic control system. We have been underinvesting in our roads and bridges. And until we step up and fix that problem, I think we're going to continue to have the kind of problems to which you refer. And certainly air traffic control systems, we used to be the leader in the world. We are falling behind what the Europeans are doing, what people in other parts of the world are doing, and we need to fix that. And in order to fix it, we need to provide appropriate resources.
All right, so to fix that and to try to mitigate some of these trust issues the American public has with Boeing right now, as well as airline CEOs, do they need to look outside the company given the crisis of culture that's been developing within Boeing?
Well, look, I don't know what's gone wrong with Boeing, and I suspect Dave Calhoun doesn't either. In a statement that he said, we're going to look very carefully at this, and we're going to learn from our mistakes. I don't know explicitly what those mistakes were. Was it a mistake to acquire Douglas a decade and a half ago? Maybe so. Was it a mistake to lay off as many engineers as they did in the COVID years? Maybe so. Has it been a mistake to outsource some of the work away from their own workforce? Maybe so. I don't know the answers to those things. And Dave Calhoun, up to this point,
shortly expecting the US Red Book year on year.
But we need to fix that. And to fix it, we've got to reinstate the culture of quality so that every man, every woman turning a wrench, building an airplane, doing a piece of wiring on an airplane, everybody feels that sense of personal responsibility, which will make that airplane come out of the manufacturing facility in perfect condition.
Bob, let's finish on a lighter note. Speaking of responsibility, you are responsible for the frequent flying program that was introduced at American Airlines. You revolutionized the industry. I just want your opinion on things, on where we are now. Did you ever think we'd be where we are now? Did you ever think, and my colleague Lisa talks about this a lot, that ultimately airlines would turn into credit card companies? Bob, did you ever see that happening?
To be honest, when we invented it, we thought it was a good idea. But I quite, in all honesty,
In time, we get US Case-Shiller 20 year-on-year forecast 6.13% on the prior 6.1%. US House Price Index month-on-month forecast at 0.3% on the prior 0.1%, and US House Price Index year-on-year prior 6.6%.
I think it's a good thing that you can buy lots of things with miles.
Of course he's not going to agree with that.
As a consequence, that mileage business is a good business.
Bob, I'm going to let you go, but I do want to know how you get concierge key, so you can tell me in the next commercial break, okay? Just not on air. Bob, thank you, sir. Bob Crandall there, the former American Airlines CEO. Legend.
He wasn't going to answer that question with anything that you wanted, because it's basically giving them all the money to do what they need to do.
Inquiring minds who fly American want to know, how do you get concierge key?
Yeah. You think he's going to tell you?
I just want to know. How many miles is it?
Just give you the key.
Or maybe you just go around spending lots of money on a credit card. I've got no idea.
Go crush it.
Coming up tomorrow, Bruce Kassman of JP Morgan, Katie Nixon of Northern Trust.
Welcome back to another Miami Open update for Bloomberg TV and radio from Tennis Channel. Fourth seed Alexander Zverev came through his rain-interrupted third-round match against Chris Eubanks.
US Red Book year-on-year 3.9%, 3.9%.
And got the decisive break early in the second set before putting the comfortable win in the books. He'll face Karen Khachanov for a spot in the quarters. And don't forget, Tennis Channel's daily live coverage starts at 11 a.m. Eastern.
Bloomberg has enhanced search on the terminal. To deliver what? You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became
1 minute remaining. I'll lead with US Case-Shiller 20 year on year.
And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day you might
Effective
be
Fed
able to
funds
write
rate
poetry.
5.33% for March the 25th, unchanged from March the 22nd.
From New York City, for our viewers worldwide, a very good morning.
10 seconds.
For Jonathan Farrow. And breathe, everybody. The melt-up is back on. Tesla is bid. Have the Italians reached out for a Cybertruck? We will debate this rolling rally, month 5, if we can close out.
6.59%, 6.59%, lower than forecast. 6.6% US house price index year on year. 6.3%, 6.3% US house price index month on month. Minus 0.1%, minus 0.1%, lower than forecast. 0.3%.
Coming up, edging higher, futures trade up, they digest the latest data and Fed speak. President Biden gaining ground as Donald Trump in the key blue wall states. And disruption on the East Coast after a Baltimore bridge collapses. We begin with the big issue. Have we reached irrational exuberance?
We are seeing signs of, the wall of worry having been completely dissolved, very aberrant behavior in the options markets, betting on stocks doubling in the course of 3 or 4 days, incredible, betting on the NASDAQ rallying a further 33% out to June after already rallying 30% since the October low. All of these things say that there is a feeling that the market isn't invincible.
Invincibility, a beautiful thought. Now, Invesco's Brian Levitt writes this morning. I had spent much of my career imploring investors to manage their emotions. I, as much as anyone, knew that breaking from investment plans at inopportune times had typically cost investors dearly. Brian Levitt joins us now alongside Nuveen's Anders Pearson. Now, Brian, of course, what you've got to put this context in, this was when a market was tumbling out of bed, you were exceptionally cautious and worried, and you were so close to pressing the sell button. Here we are in a euphoric market, it's rising, There's weaponized FOMO. What does your emotion tell you right now about market participation for you?
Well, my emotion tells me that, and my views tell me that peak inflation, peak tightening, peak interest rates tend to be good for stocks over the subsequent years. So if you're looking at near-term indicators of sentiment, it may suggest that things are a little bit too bullish or a little bit too optimistic in the short term. And look, markets always tend to have some pullbacks in a given year, but I still come back to that principle that inflation's beyond us. It's peaked months ago. The Federal Reserve is going to be easing and normalizing the yield curve, and over the subsequent years, that tends to be a good backdrop for equities and credit.
Okay, it has peaked, but it is sticky. Anders, good morning. Some people say there's an irrationality in credit. What do you say?
Well, I would pretty much echo what Brian said. I think it's similar trends on the credit side that we're seeing on the equity side, that momentum is holding up very well, and for mostly good reasons. Fundamentals are holding up quite well. I think we're finding a lot of investors are looking at the credit markets and look at yields are very attractive. If you look at investment grade at over 5%, high yield close to 8%, senior loans around 9% or higher in many respects, those are attractive income levels. And while we can argue that spreads on the credit side have become a little bit more on that fully valued range, at the same time, your momentum continues to be behind us. So from that perspective, we could see that continue for a bit longer.
Okay, well, we'll dig into the premium if 8% is enough over cash at 5.25%, and maybe even the risk of no cuts. But there's a combination that we can discuss. Let's talk about the Fed speak this week, because the latest from the Fed Governor, Lisa Cook.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
Data, 10-year yield up 0.8 basis points on the day, have fallen 4.26%.
I mean, Bostic and Cook yesterday took a little bit of heat out of the equity market in the first instance, Mike, but give us your take.
Well, we got a little bit back today, Madison. It's because we're all data dependent at this point, including the Fed. Durable goods orders came in stronger than expected, up 1.4%. Capital goods, non-defense ex-air, that's the proxy for business spending, goes into GDP, also much stronger than anticipated, but then shipments were down. So what is it telling us about business spending and the economy? It's a little bit of a mixed message. The one reason that we saw such a big gain in durable goods, by the way, was Boeing. They rebounded a little bit in February, selling 15 aircraft. And look at, that's Boeing. That's the Boeing effect there. And you can see how volatile it is when the Boeing orders come in and out. So that's why Wall Street doesn't pay a whole lot of attention to the headline. But in general, a little bit of strength, which means the Fed has to decide what it's going to do. And as you pointed out, there is a difference now, a split on the Fed. We'll see if it closes as they get closer to their May meeting. But yesterday, we saw Raphael Bostic of Atlanta reiterate the one cut this year theme he sounded on Friday, followed by Austin Goolsbee from Chicago saying he thinks 3 cuts are probably the most likely thing. And then Lisa Cook coming down in the middle saying, we just need to be cautious. She didn't take a side one way or the other. But it does look like at this point, the Fed is confused as everybody else about the economy and where it's going. Fortunately, they don't have to trade day to day.
No, well, there's a trifecta there, isn't there? You can take whatever portion of the dinner menu you want there. Mike, thank you very much, Mike McKee on Fed Speak. My guests this morning are Anders Pearson, Brian Levitt. Anders, to you first of all. I mean, there is a non-inconsiderable amount of dots at 2 cuts, and Bostic voicing 1 cut, but you're dug in at 3. Why?
Yeah, I think our base case is that we're going to have 3 cuts this year, and certainly, our take is that particularly Powell is quite keen to get going at some point. Our view is that it's going to be this summer, data dependent, of course, if it's a June or July kind of type time frame, but our view is, again, that Powell is quite itching to kind of rip the Band-Aid off and get going, and for now, 3 cuts seems like the most natural kind of type approach here to keep the balance going. And I think investors get a little bit carried away around how quickly it will happen, what have you. We could see them taking a pause at some point as well. But at the same time, we do expect a summer time frame is the natural first step from a cutting perspective.
Brian, if we talk about the triggers for pause, we've yet to see anything really cause a pause. 500 basis points in hikes. It's a strong growth economy. Employment is sub 4%. All of the bricks are there of a very strong, robust U.S. exceptionalism. It's trading at 23 times earnings or thereabouts at the moment. How much more road have we got to travel?
Well, I want to make 2 points. The first is around this idea of cuts. It's almost as if we worry if there's only one cut that's going to be a major challenge for the market. The reality is that just means we have a relatively strong economic backdrop, which should be good for earnings. So the denominator in the valuations that you speak about. Now, with regards to the multiples on the S&P 500, they are a bit elevated compared to history. A lot of that tends to be concentrated in the top 10 names, many of which who have not seen their valuations actually go up all that much, even though their prices have gone up because their earnings have delivered. If you look at the average S&P 500 company or the other 490 names, they generally trading in line with long-term averages. And if you consider the earnings yield on the broad market and compare it to a 10-year Treasury rate, it's pretty much at par. So it's pretty much equal. So it suggests that stocks are neither expensive nor cheap to bond. So I wouldn't be overly concerned about valuations. They've never been a good timing tool anyway. And again, back to that point, the average S&P 500 stock is not particularly overvalued.
And there's one piece that came to my attention this morning is Larry Fink. And this, I hear what you say, which is I can get 8%, I can get plus 5% on investment grade, 8% over on high yield. But Larry Fink really grasped the zeitgeist this morning in a note. He said, this is about debt. It is more urgent than I can ever remember. More leaders should pay attention to America's snowballing debt scenario. A bad scenario akin to Japan in the 1990s is something that could evolve. It's a very, very serious series of warnings about what could happen. Now, he says we're not in a debt crisis. Is a debt crisis inevitable? No. But at some juncture, sovereign markets of the United States of America will face an incredible headwind. Does that come into your thinking at all?
Yeah, and I think we had some comments from the CBO side as well, kind of looking into where things could be going forward. So yeah, no, certainly we debate that quite a bit on our team, and we get questions from clients all the time around this. For now, I would say that we're looking at sort of where we're sitting here today, and partly from a Treasury issuance that should be quite balanced in the coming months. There was a lot of discussions around that and without potentially would do the rates as we were sitting here come back in November. They're basically been using bills primarily, and until April, we're going to get the tax receipts coming in and then probably get steady auctions for the rest of the year. So as I'm looking here, for 2024, it's probably going to be a fairly stable environment, and it's really more probably a 2025 and beyond kind of type issue. So certainly not ignoring it, but I think for now, the markets are going to be more focused on kind of having stable auctions, successful auctions. We just saw the 20-year auction being very successful, and really focusing probably more on the elections and what kind of happens on that front. Because let's not forget that will have an impact on where we take the debt levels going forward as well. That number could be meaningfully larger if you have a sweep on one side or another. So for now, I think the market's going to be probably focused a little bit more, kind of Fed cuts, hot economy, inflation, what have you. But certainly as we're thinking 2025 and beyond, that is an area that we're going to have to start, basically counting in a little bit more.
Brian, can we just round off with you? I've had a number of people talk to me about cyclicality and what that means. I'd SocGen yesterday upgrading their financials for the first time since 2021. Briefly, what is cyclicality? You favor it. How do you make it come alive?
Yeah, the cyclicality would come into play typically around a Fed easing cycle and the normalization of the yield curve and a catalyst for broader economic activity into hopefully even an expansion. And so in that type of environment, you want to favor energy, financials, industrials, and you're starting to see that work a bit. You have seen some broadening out of this market, which is a good sign and is likely in anticipation of this easing cycle that we will get over the next year and a half.
Okay, Anders, thank you so much. Brian, thank you for being with me. Brian Levitt there, and Anders. A quick snapshot of what's going on in markets this morning. You have 10-year government bond yields ticking up ever so slightly, a little bit more coming to auction today, 5s and 7s. And of course, PIMCO, they have a smaller exposure to US Treasuries than they do perhaps to the UK and Canada. Euro-dollar, that's the euro up by 0.2%. And gold trades up 0.9%, trading through record highs ahead of the PCE on Friday. Let's look under the hood of the stocks ahead of the opening bell. Abigail Doolittle is with me.
Well, Manus, overall, we do have the index futures up just slightly, but one stock that's weighing, heading to a second down day in a row, that is Apple. And this, of course, on the report that China iPhone shipments fell 33% in February. This is very consistent with a report that we had earlier this year, earlier this month, I should say, that the iPhone maker saw a 24% plunge in iPhones in the first 6 weeks of the year. This stock now down 15% from its December peak, so truly in a correction. Tesla, on the other hand, up 3.3%. It seems to be that it has to do with Italy contacting Tesla, the country's industry ministry, reaching out to the company about potential production of electric trucks, that Cybertruck. And then finally, the big winner, Viking Therapeutics, up about 16%. They put up good early study results for their weight loss pills. The street's very pleased. Truist is saying that the data is strong, the study was strong, the stock should be strong on this. Indeed it is. Plus, there is a 12% short interest, so some of those bears running for cover.
Abby, thank you so much. Abigail Doolittle there with the latest moves on the market. Coming up, I take you to a live shot of the Francis Scott Bridge in Baltimore, which has collapsed after being struck by that container ship. We're waiting the news conference that will begin at 9:30 a.m. Now, this is the Francis Scott Bridge, as I say. The FAA are restricting drone flights near this major commuter bridge. You're looking at the price of AP Mullen-Maersk, which is the ship that you're looking at there is indeed chartered by Maersk. We'll have more details on this tragedy through the morning. The news conference at 9:30 and AT Live with all the details is available on your Bloomberg terminal.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that, as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we that.
Getting details through, and there will be more as the morning goes on. You're looking at live pictures of the collapsed bridge, the Francis Scott Key Bridge in Baltimore. It collapsed around 1:30 a.m. this morning after it was rammed by a container ship, plunging vehicles and pedestrians into the water. The collapse also causing chaos at the port of Baltimore. It's one of the most important ports on the U.S. eastern seaboard. Amy Morris joins us now with more. So the ship, Amy, it's unclear. There's been a number of reports, ABC reporting about a loss of control of the ship and that there was some kind of warning. Before we get to this press conference, what more can you tell me?
Well, there was some loss of control on the ship. If you go back and look at the video of when the ship actually hit the bridge, you can see smoke billowing. You can see the lights flickering. You can see that the ship makes a very sudden turn into the bridge abutment, which is why a lot of people at first thought, wow, could this have possibly been intentional? Law enforcement officials have made it very clear it was not intentional, or at least there's no evidence to suggest that it may have been intentional. FBI is on the scene. So is the Coast Guard. Homeland Security Secretary Alejandro Mayorkas has also said that they're investigating. The White House is being kept apprised of all of this. The federal officials, state and local officials, they're all working together to figure out just how this could have happened and why one ship hitting one part of the bridge caused the entire bridge to fall into the water.
Now, this has got, there's a human tragedy side to this. We're waiting to hear what the impact has been in this news conference, but also there are ramifications for one of the busiest ports on the eastern seaboard. If you just look at the volume of autos going through this port, 847,000 light trucks and cars went through it in 2023. What may it mean to supply chain, to diversions? Do we know any details in terms of the ramifications?
This could have tremendous ramifications. The Port of Baltimore was #1 in shipping farm equipment, construction equipment, cars, coal. It was #1 in shipping so many different things just from that one port in the past year. So to have that completely cut off is definitely going to have an impact on the supply chains. It's just not clear exactly what yet. I did hear from local officials on the scene who say they are still trying to get engineers to the scene. They've talked to several different engineering firms so they can see how long it's going to take to try to find a workaround for this.
Okay, Amy, thank you so much. That is Amy Morris. Let's turn our attention to politics. We have the latest Bloomberg News Morning Consult poll. It shows President Biden gaining against the Republican challenger, Donald Trump, in 6 key swing states. The blue wall, Anne-Marie knows it well. Anne-Marie Hordern can talk me through what is the progress for Biden in this poll. Good morning, Anne-Marie.
Good morning, Manis. Well, we've been conducting this poll over the course of a few months, and by far, this is Biden's best showing when it comes to this monthly poll, and that is because he's able to gain ground in 6 of these 7 key swing states, though we should note that Trump is gaining ground in Georgia, one that Biden has not been able to do just yet, and he's also been able to flip one. So when it comes to Wisconsin, Biden is now leading Trump by 1 point. He trailed him by 4 points in February. Pennsylvania, they are tied, but Trump had a 6-point lead last month, and they're also tied in Michigan. And you mentioned the blue wall. This is really important to the Biden campaign. It's the northern battlegrounds, and they would pretty much all but mean Biden would have a second term if he's able to hold on to these northern battleground, these blue wall states. And what we're showing is that he is gaining ground and even flipping when it comes to Wisconsin. So by and large, this is a good showing for the current president, given what we've seen in the prior polling and data we've had. One thing I would note, Manis, of course, especially as we're waiting important PCE data later this week, Americans, the swing state voters, are starting to feel better about the economy. The issue is they still say Trump is better when handling a wide range of pocketbook issues, everything from finding good jobs and also as well things like interest rates.
Yeah, but to a certain extent, this was the narrative that the White House was hoping would eventually filter through. Just looking at the driving season coming up, the price of gas is going to be at $4. That is going to bite in the pocketbooks. What do you make of the Trump story, the SPAC deal that went through yesterday? The stock was trading up furiously. Of course, the conundrum now is how can Trump utilize perhaps the value within the SPAC for himself? Can he? Or what are the impacts of this deal. This is his social media company reversing into a SPAC, and I think if it stays at this kind of price, he's going to be worth $6 billion.
Well, for the first part, it means that he was able to get on the Bloomberg's billionaire index, right? And this is going to be a windfall for the former president. There is this 6-month lockup period, but I did see some reporting that if he was able to get the okay from members of his board, which we should note, people on this board of this media company, the likes of Kash Patel, Robert Lighthizer, individuals that worked under the Trump administration, then potentially he can actually sell shares sooner. So that would give him a major windfall, especially as he's paying a number of legal fees.
Indeed. Well, we'll keep an eye on that stock price. Anne-Marie, thank you very much for being with us on the very latest poll. Coming up, we'll give you the morning calls on Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
The melt-up is back. One stock at the bottom of your screen, Trump Media Technology, is rising furiously, up 27%. What will it mean for the wealth of the contender in the presidential race? Stocks are rising. Got a nice bump in Tesla. Some tech is up. Abigail will take you through the Trump stock in just a moment. Time now for your morning calls. This is what we've got from Wall Street. Jefferies upgrades Clorox to hold. The analysts say that the company's exit from Argentina and Uruguay and Paraguay is a long-term positive. Next up, Berenberg downgrades Stellantis to a hold. The analysts say there's little meaningful near-term upside and highlights a challenging 2024 for the auto industry. Finally, Raymond James raises the price target on Disney. Barclays upgrades the stock yesterday on the company's turnaround story. Coming up, well, we are set to return to Baltimore, addressing the Francis Scott Key Bridge collapse. We'll bring you that live as it happens right here on Bloomberg. Good morning from New York.
times in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
You can feel the relief at the nicey end of the NASDAQ because the mega meltdown is back. You got Tesla a bit up nicely this morning. We just had Invesco with us saying this is a justifiable situation. This is not a mania. This is not an exuberance. You have the likes of Tesla also flying higher. There's the bell at the opening bay.
Market on open imbalance, 72 million to the buy side.
In terms of the rest of the asset classes, keep an eye. You got Eurodollar up an eighth of 1%, even though PIMCO, for example, are not as long of US Treasuries as they are relative. They have a preference for the UK and Canada. That's Andrew Bowles. A little bit more auction paper coming to the market. 5s and 7s will come, but PIMCO talk about the pace of rate cuts in the USA being slower than the rest of the world, and gold is up by 0.6%. We've gone through some records recently on that because there is a little bit of concern and hesitation ahead of the PCE on Friday. Core PCE expected to come in at plus 0.3%. One stock to watch, I mentioned it to you, it's Tesla. Now, an Italian newspaper is reporting that the country's officials have contacted the EV maker about their electric truck. Craig Trudell is with me. I mean, this truck is, I mean, it's a thing of beauty if you look at it conceptually, but talk me through. The Italians are keen on this.
Yeah, I think it's worth kind of taking a breath on this one, Manus, just in the sense that this company has been making semis under pilot production for more than a year, and as of late last year, the company, an executive said that they had roughly 100 in their fleet. So this is really moving at a pretty glacial pace for Tesla. We also had a very interesting interview on Bloomberg Television last week with the CEO of Daimler Truck, who believes that Tesla would have to redesign the semi for European use, that it's too long. So, whether or not, Tesla ever actually makes the semi in Italy, I think we're a long way from learning that. And my suspicion is that this is a reaction to Elon Musk saying in Germany recently that, eventually it may make sense for Tesla to make semis there.
Okay, it's always it's an interesting one between price cuts, BYD competition, car production cuts, and here you go, a good news story coming through from Italy. We'll run with it. Craig, thank you very much. Craig Trudell. To the social media spectrum, Trump Media Technology Group soaring ahead in the first session as a publicly traded company. Abigail Doolittle has the details on DJT. Abby.
It's pretty amazing. Just moments ago, it was up 58%, currently up closer to 30%, but either way that you take a look at it, absolutely soaring on its first day of trading. The Trump Media and Technology Group, after its post-SPAC debut, they basically did a SPAC merger with Digital World Acquisition, as you mentioned, the new ticker DJT. Difficult to forget with the former president, his initials, of course. And it gives the parent company of Truth Social more than $275 million in capital, a win for Trump amid legal and financial woes, we should say. And at current levels, Trump's shares are worth, it's hard to calculate at this moment, at 11, when it was up 11%, that his shares would be worth $6 billion. So many, many multiples of that. He is subject to a 6-month lockup along with performance requirements. Now, while making the entity profitable is important, in this election year, Manis, this may be the ultimate way of doing an informal bid or look at the election. Lots of investors using this as a way to bet on his bid for re-election. CEO of Accelerate Financial Holdings saying that the underlying business fundamentals will matter at some point. But for now, quote unquote, DJT is the mother of all meme stocks. With the stock up 32%, up as much as 58% today, hard to disagree.
Let's see what the long-term trajectory is on the profitability. Abby, thank you very much. Abigail Doolittle there with the very latest on the social media scene. Let's turn to consumer space. Krispy Kreme donuts are coming to McDonald's across the US. It's the burger giant's latest effort to boost the business breakfast. Simone Foxman is there. Oh, a Krispy Kreme at 3 a.m. in the morning. There's a thought. Simone.
Yeah, that's a sugar rush. You know, it's also a sugar rush for Krispy Kreme investors is what the shares are doing today. We've seen them pretty much recoup all of their losses so far this year. This is the biggest rally in Krispy Kreme shares since the company IPO'd back in July 2021. We understand that there was a test of selling Krispy Kremes at McDonald's in 2 cities in Kentucky, Louisville, and Lexington at 160 restaurants. According to a statement announcing this deal this morning, the demand exceeded expectations, and so Krispy Kreme donuts will roll out in the second half of 2024 and end up in all McDonald's locations by the end of 2026. Part of the reason investors like this, though, according to the CEO of Krispy Kreme, this will double the points of access for people who want these Krispy Kreme donuts across the country. It had been having a bit of a tough year, too, because, as Citi put it, the outlook it put forward back in February was not so sweet, with pressures from inflation and other things on its ingredients. Also saw a little bit of a slowdown in terms of expectations for what people wanted, but now it will be a much wider availability of Krispy Kreme donuts, and that's clearly a positive for the stock this morning, Menace.
Volume is everything, isn't it? There you go, Krispy Kreme and your McDonald's. Simone, thank you very much. Let's pivot to Maersk stock this morning. Now, this is the Danish firm. It is the chartering company of the vessel that, as you can see there, crashed into the Francis Scott Bridge in Baltimore. Naha Katan joins me now. So what do we know in terms of the staffing? Is it Maersk staff who were on this ship? Who actually owns the ship? How does Maersk using this ship play out?
Thank you. Thank you for having me. So actually, its shares fell after it said it chartered the ship, but the ship sails under the flag of Singapore, and our Bloomberg intelligence experts say that the company may not be directly responsible for the collapse because the company had no crew on board and the ship was operated by a charter company. But we are seeing possibility of an extended shutdown, and that's going to cause major congestion for travelers and businesses, possibly for months, because the bridge allows commercial ships to enter the port of Baltimore. It's one of the top ports in the U.S. By volume and value. It handled over 10 million tons of cargo annually. And it's also the largest U.S. port for handling cars and light trucks. It also handles sugar, imported sugar, coffee, and coal for export. So we're expecting that resulting bottleneck could accelerate a shift of goods through to the West Coast ports.
Would that almost be immediate, Naha? I mean, we're in the midst of managing a crisis, a human aspect to this crisis, a logistical aspect to this crisis. How quickly can shipping divert? It literally is instantaneous, isn't it?
Right. I mean, for now, if you go around the bridge, it extends the time from half an hour to about an hour. So this would have to be, pretty quick, a pretty immediate shift.
Okay. Now, we are waiting that news conference to begin. As it does, we will bring that to our viewers. Naha Katan there on the implications for Maersk, the chartering company of the ship that collided with the bridge in Baltimore. Now, China is seeking to shore up confidence in the economy. Some of the U.S. CEOs in Beijing are receiving an invite to a Wednesday meeting with the top Chinese leader, widely expected to be President Xi Jinping. Pfizer and FedEx are the chiefs potentially having those meetings. Enda Karen is with me now. This is a very interesting moment. We have monetary policy, fiscal policy, and then we have brand Xi engagement, don't we?
Indeed, Miles. It looks like classic outreach from the Chinese authorities. Several of the big CEOs of U.S. companies are in Beijing at the moment for a conference, and throughout that gathering, the officials in China have been sending a message to the world that they are open for business, that the economic downturn is in hand, that they have policy tools to turn that around. And now we have our colleagues reporting that it looks like there's a meeting with a senior leader being set up for Wednesday. It's expected to be President Xi Jinping. That's a similar kind of model to what we saw at APEC in San Francisco back in November, when the executives had an opportunity to had an audience with Xi Jinping back then. So, to your point, it's when you consider the backdrop being about FDI at its worst in decades, overall kind of global sentiment towards China being pretty negative at the moment, this looks like a classic opportunity for President Xi Jinping to meet with leaders of some top US and global companies and, of course, make the sales pitch for what China can offer them.
From an economic perspective, and you talk about FDI, how critical is it? You've got fixed asset investment, you've got the consumer spending, you've got industrial spending, but you have FDI is perhaps the biggest issue. It's been that vacuum of money coming out of China. The flow has not been in the right direction. How critically important is it to Xi Jinping, and where do we stand on FDI right now?
I think it is important, Manus. I mean, the backdrop is we know China's economy has rebalanced over the years. It is now, of course, more consumer-driven than it has been. It is no longer just about manufacturing and exports, say. But FDI is still a very important generator of economic activity and profits and exports, and especially during the downturn that China's experiencing now. Of course, they want foreign know-how, they want foreign technology, they want foreign capital, they want to see that sector expanding and growing. Some of the sectors aren't necessarily critical for their own national ambitions, but at the same time, at this stage of the economic cycle, I don't think many countries would want to be actively turning away FDI. So it is important. And the other side, of course, of that ledger, as you mentioned, is the portfolio flows. Global investors really have turned south on China over the past year or two at this stage, and there's no sign of that turning around in a hurry.
The price reaction for an economist, Intel and AMD, I'm sure you didn't spend a great deal of time mining down into that, but if I look at that as a reflection of the potential for escalation in tariffs and restrictions, there doesn't seem to be much of an off-ramp, even in this Biden administration, on the tariffs. And the risk is that you go into a second administration from Trump and that things escalate. How important is it for the world that there is some kind of an off-ramp in tariffs, that we head backwards rather than forwards and higher?
Well, we certainly seem to be in some kind of a holding pattern right now, Miles, ahead of the election. As you say, the current administration was pretty hawkish also on the trade front. They maintained those tariffs against China. They pushed through various export and investment controls and the like. And, of course, now we have to wait and see what kind of administration comes out the other side of the election in November. But then, to your point, regardless which side it is, it's going to be either pretty hawkish or very hawkish altogether on China. And if it is the latter, with former President Trump talking about tariffs of maybe 60% or higher on Chinese goods, then obviously that would certainly impact trade between the world's two biggest economies, and it would ricochet around the world. It wouldn't just be tariffs, don't forget. There are other tools as well around investment and export controls. So it's fairly delicately poised right now. The world economy has a lot of fragility underneath the surface of okay GDP growth. So if the two biggest economies do go at it again in terms of a resumption of the trade war, then obviously that will reverberate right around the world.
And of course, this all comes as the Bao Forum takes form. There's a lovely line in there about FDI slumping to a near 30-year low in 2023 in China. So they've got a heck of a lot of work to do. And thank you very much, as ever, for being with me, Enda Karen, there on the macro story with China. Plenty more ahead on Bloomberg. We're waiting for the press conference to begin in Baltimore. You're looking at live shots of that pretty tragic scene of the bridge in Baltimore. We'll bring you that news conference as soon as it begins.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The S&P 500 is on track to notch 5 straight months of gains from November through to March. Bloomberg's Jess Menton is here to talk me through the stats. This is a rare winter rally, Jess. I mean, it'll be quite something. If we do get to the close of business on Thursday, we'll have only done this a couple of times since 2013.
That's right. And it's very rare, specifically if you're looking from November to March, because that time period usually, as you know, there tends to be tax loss harvesting. So when you look back in history, usually you might see a down year in December or January, but the only other time
At 10 a.m. Eastern Time, we get USCB Consumer Confidence forecast 107 on the prior 106.7, with a range of 112.5 to 105. And the Richmond Fed Composite Index forecast -5 on the prior -5. At 10 a.m. Eastern Time, we get USCB Consumer Confidence forecast 107 on the prior 106.7, with a range of 112.5 to 105. And the Richmond Fed Composite Index forecast -5 on the prior -5. 1 minute remaining. I'll lead with USCB consumer confidence. Seeing the Richmond Fed Composite Index coming out, minus 11, minus 11. That's lower than forecast, minus 5. Ten seconds. Still waiting. $104.7, $104.7, lower than forecast, $107. So waiting for the USCB consumer confidence. We did see the ECB that settled 317 billion euros in corporate bond purchases, settled 2.343 trillion euros in public sector bond purchases, and ECB bond holdings under PEPP are 1.67 trillion euros as of last week. The ECB says lending to banks fell 371 million euros to 400 billion euros.